All right, I'm going live early. We are 5 minutes early. Why? Because I'm staring at red. You're staring at red. We're all staring at red. So I said, you know what? We might as well all stare at that red earlier than normal. And boy, are we staring at some red. NVIDIA, the generational company of our lifetimes, is down 8%, which equivocates to about $195 billion in market cap. This is probably their fifth or sixth largest decline in history in terms of single-day market cap losses. And it's bad. It's bad right now. Now, there's a couple reasons why this is happening to NVIDIA that are actually very nuanced and interesting. That's another reason I wanted to go live early, because there's a lot of things to talk about. But we're going to talk about some of the volatilities, talk about the market red, talk about what's going on with NVIDIA. Also, we do have Rocketlab, Soundhound, Duolingo, Monster. We have a ton of companies that, unfortunately for them, are going to be the ones that have to report after, I would say, one of the more nastier days in February. I mean, we got 2 days left of February, and I know the second half of February has been pretty bad. But in particular, this feels nasty, and it feels like you're just getting slapped in the face over and over again because of some of the things that I'm about to talk about when it comes to NVIDIA. Now, one thing I do want to say real quick before we get into why the sell-off is happening. The entire market goes red right now. Tesla's going red. Grab's going red. Grab was going very green for the day. Now it turned red. Amazon goes red. Meta goes red. Rocketlab goes red. Celsius turns red. SMCI is back to the price I sold it at 2 weeks ago, down 16% on the day. I don't believe any of this red is real outside of the red for NVIDIA. What do I mean by that? Markets were up the majority of the day. I mean, in certain parts, right? Like, obviously, there were different parts that were red. The semiconductors were red for a bunch of different reasons when it came to NVIDIA, but a lot of different names, like Robinhood was at $52. Grab was at $5 at one point. Why are they selling off now in the final 20 minutes until we get into the close? I don't think it's because people decided they're going to start selling their Robinhood and Grab and Palantir now down 5%. Palantir was at freaking $93 at one point. Now it's at 84. I don't think people at 345 were like, okay, now it's time to sell Palantir. I quite literally believe this is algorithm. This is algorithmically driven, and these are algos that are looking at the NVIDIA decline, and we're going to talk about why NVIDIA is getting hit so badly right here, and they're basically selling everything else off at the same time. Are some retail investors, institutional managers also selling into the weakness? Sure, but I think the far majority of this is algo driven, and it's definitely scaring a lot of people, which could be contributing to the weakness, but I don't really believe in any of this red after 5 hours of green. Now we go red, but the NVIDIA red does make sense to me, and we're going to talk about why it makes sense right now. Okay, so what's going on with NVIDIA? Well, ChatGPT, OpenAI, they just released their newest model, 4.5. Sam Altman just tweeted that they came out with 4.5. Now, this may sound super cool, right? Because, okay, we have 4.5. That's amazing. AI, progress, innovation, yada, yada. Everyone should be excited. Not necessarily. So a couple of things. First of all, here's what Sam Altman said. The good news is that it's the first model that feels like we're talking to a thoughtful person. The bad news, it is a giant, expensive model. We really wanted to launch it to our Plus and Pro at the same time, but we've been growing a lot and are out of GPUs. The dude said they're out of GPUs. We will add tens of thousands of GPUs next week and roll it out to the Plus tier item. Hundreds of thousands coming soon, and I'm pretty sure you guys will use everyone we can rack up. I mean, those three sentences to me are some of the most bullish sentences you can imagine when it comes to the concept of NVIDIA, right? The poster child of AI, OpenAI, saying, hey, we don't have enough GPUs, and we're going to add another couple 100,000, aka we're going to pay NVIDIA a couple hundred or close to $1 billion, and we're going to get those GPUs. So that's bullish, right? That makes sense. Cool. Well, why is NVIDIA tanking? How could NVIDIA be tanking off the idea that Sam Altman literally says we cannot get our hands on enough GPUs? It's for this one reason. The benchmarks are in when it comes to GPT 4.5 versus the previous models, and it's not a significant improvement. It is not a significant improvement. From the benchmarks, OpenAI just released GPT 4.5 at 3 p.m. Read is the benchmarks were weak. The semis are dumping on that. It's an improvement, but it's not big. And the reason for that is because Sam Altman says it's a giant, expensive model, but it's not leaps and mountains better than the previous model. So what's happening right now in the semiconductor sector is basically the broader market's thinking, okay, GPT 4.5 just came out. It's like one of the most groundbreaking models, but it's not that much better, but it cost a lot of money to build it. So they spent a ton of money building this thing. It's not giving you that many better results than what we've recently got from 4.0. This is another person who used to work at AI at Robinhood. He just tweeted out that, and he said, this is an undeployable model, very little gains for an order of magnitude increase in cost. If OpenAI was a public company, they would have been down 20% today. And so you've got someone who deploys models for a living and is basically saying this is not something that is so substantial or exciting or interesting, but the costs to run it are far beyond the cost of the previous model. And so now the market's thinking, have semis, or not just semis, but scaling AI infrastructure in and of itself, has that hit a wall? And if it has hit a wall, well, do you need that many more GPUs? Does NVIDIA need to have that much more demand? NVIDIA right here, 120.93, down 7.9%. I still think there's a lot of nuance to this. This is just the, first thing I'm seeing as I'm digesting the information like you guys are. I'm sure there's a lot more to what's going on. There are probably arguments for why 4.5 is that much better. And, this is just the quick takes that I'm hearing right now. But in general, that's my best explanation for what's going on with NVIDIA. If you look at the semiconductor sector, decimated. SMCI, 17%, Intel, 2%, ASML, 5%, Broadcom, back below 200. This thing was hovering over 250 back in late December. Qualcomm, down 5%. TSM, no longer a $1 trillion company, down 6%. Marvell down 8%. ARM down 6%. Lam Research down 5%. Dell, they're reporting today, down 6%. Micron memory storage, they're down 6%. AMD is below $100. Last time we got AMD below $100 was, it's been more than a year. It's been, November 2023. The last time NVIDIA touched below 100 was November 2023. More than a year. And then you got NVIDIA right here, basically going back to the levels that it was at a couple of weeks ago on the deep seek dip, now down 8% on the day. So, it's pretty aggressive. Rocketlab right here just got the notification is down 5%, and they're going to be reporting into everything we've got going on. Look, here's my take on this. I think we need a lot more research and nuance to understanding what exactly is going on here, because I don't think everyone's an expert when it comes to scaling laws and AI infrastructure, et cetera. But this is the sort of basic argument that people are thinking immediately. And this argument could be wrong, or this argument could be a lot more nuanced. But people are thinking, okay, if OpenAI is spending so much on money, but they're not increasing the output of the model, then the value of the GPUs or the value of the entire semiconductor supply chain when it comes to building and deploying these GPUs is not as valuable. However, quick counter argument to that, Grok 3 is amazing. And I don't know how good Grok 3 is compared to GPT 4.5 because I haven't tried 4.5 yet. But Grok 3 was leaps and mountains beyond what people thought Grok 2 was and what they thought GPT 4.0 was. And they used about 200,000, or they used 100,000 cluster, and they're adding another 100,000 cluster to be able to create the reasoning capabilities for why Grok 3 is so good. So I think there's other arguments that maybe OpenAI's research particularly, or their R&D is just not as good to be able to create those models. But there's also an argument that it doesn't matter about their R&D. It matters that scaling is hitting a breaking point, and there's just not enough momentum to keep it going, which is obviously not the best for NVIDIA. Bitcoin right here, 83,000, trying to touch those 82,000 lows that it hit this morning. Coinbase, $10 away from below 200. MicroStrategy down 9%, 241. Robinhood holding up a little bit. I mean, it's only down 0.43%. At one point, it was at 52 today. So it's down on the day, but it's holding up. CleanSpark down another 4%. Cypher down 5%. Again, MSTR down 9%. And then BitX, 38.28. Down from $65. That one is down 3% as well on the day. So it's red. It's red. And that's what we are currently seeing here right now. Archer's under 8. NASDAQ's almost down 3%. We are definitely seeing some pain currently right now in the markets, and Rocketlab potentially might go just here below 20. Speaking of Rocketlab, I'm going to have someone on with me for the next 45 minutes to help break down what the heck is going on earnings, and if we can understand kind of what's going on in the macro as well and how it might affect Rocketlab. Ladies and gentlemen,
how are things, man? I appreciate you having me on.
I appreciate you being here. I like the Rocketlab hat. You are ready for earnings, but my question to you is, how do you feel going into earnings with all this red?
There's with the red, I mean, I quite cherish a good red day. I mean, I'm a long-term investor, and for somebody that is always about consistently dollar cost averaging every single month, every paycheck I get, I add more to the markets. It's nice to be able to add, at say $20, $21 versus the $30 we were just seeing about a month ago. So to me, I always cherish a good red day. I think a lot of times people forget that when things go on sale, you like to go to the mall when things are on sale. Why not go to the stock market when things are on sale? So I quite like it.
It is a fair point. All right, so let's do a quick little preview of Rocketlab. Then I want to get some of your thoughts on the macro. In general, obviously stocks down from 33 to 20. I'm sure when it got to 33, you are very level-headed on valuation, so you probably thought it got extended there. Do you think this thing pumps or dumps on earnings? And what do you think Peter Beck says to really get the market to care about Rocketlab today?
Well, I'll start off with the negatives that I'm seeing. So, I mean, we are only 4 months away from where people are anticipating a rocket launch for their medium lift rocket that's supposed to be competing extensively with the Falcon 9. People are obviously writing short reports. People are starting to say, some of the catalysts and milestones that they need to hit to be able to hit that that key milestone of launch is kind of getting pretty close, right? We're about 4 months away from that point. I'm with them. I don't necessarily think that they're misguiding anybody with respect to the fact that, we're 4 months away. I think the whole thing that people need to be considering is there's a lot of milestones to go, but they're also ticking off a lot of milestones. Rocket engines are ready to go. There's a few other things that obviously need to be checked off, like the test pad, the launch pad obviously needs completion. The regulatory has to be completed. The static fire of the entire stage 1 has to be completed. Integrity tests of the whole integrated vehicle needs to be completed. So there's quite a bit of stuff to go. So I anticipate going into that, there's probably going to be more clarity with respect to when a launch window may occur, probably likely to be pushed a couple months beyond middle of the year. But I think offsetting that, a few key things have happened since the third quarter report. We've obviously had some successful HASTE launches. For people that aren't familiar with that, that's the hypersonic test vehicle that Rocketlab is kind of spearheading. And with that, they've got a relationship now with Kratos that's going to go forth. Whether or not that gets included into an American Iron Dome system, I think is the potential big catalyst potentially for Rocketlab there. But you should see some contract extensions associated with that. Now, whether or not that's just noted on the call is likely. I don't think it's going to be included in the backlog because that was included in January. But things that will be included in the backlog for the first time is Neutron contracts. So there was a confidential customer that was brought on in November timeframe for 2 launches. So that's about $100 million worth or $110 million worth of backlog items. So we should hear more about that. And then something that was not included in the Bleecker Street report, which is the short report that came out earlier this week, is the NASA contract that was released in January. That is a big contract. That is with NASA. It's called the VATR contract, which is basically a vehicle that's supposed to be helping with respect to space defense and stuff of the like. That also is a big contract, upwards of $1 billion worth of potential contracts and maybe even an opening for more. That won't be included in the backlog, but I'm sure they will talk about it extensively today. And then obviously, it's going to be the highest revenue quarter for Rocketlab, 100% year over year. Last year quarter was 60 million. This quarter is supposed to be, I think, on the order of 125. They guided for 125 to 135. I think it'll be on the lower end of that. 6 launches in the fourth quarter. So I think overall there's going to be some positive negatives. I think we end flat to slightly up, but knowing me and how my track record has been for calling these things over the past, I'm getting kind of like Jim Cramer, but I'll probably tank, and that's okay with me. I'm ready for either result. Maybe not so much on the downside because I don't have as much cash because I'm currently buying another house. But
what a flex! What a flex!
When you have so many houses, it's hard to juggle all the cash.
Okay, so here's a question: if Neutron gets delayed, does this get delayed till 2027 or a couple months?
I see the Bleecker report said like years. I don't think it's years. My guess is August to October window. I think they're making really good progress. I think they're not getting the credit they deserve. These guys have launched 60 vehicles into space or in the air if you want to include haste as not necessarily space, but more hypersonic in orbit. But they've done this before. The engines look great. The engines are already getting refreshes, like in terms of being like they've already shaved 200. It was either 200 pounds or 200 kilograms off the initial engine weight from when they first started in May of last year. So within 7 to 8 months, they've been able to shave 200 pounds, I think, off of the engine weight. Keep in mind, there's 10 engines on each one of these Neutron rockets, so that alone is close to 2 tons being removed, or yeah, I guess 2 tons of volume removed. Not to mention other things that I'm sure they'll find out as they get closer and closer to things. But hey, I mean, let's be blunt here. The whole market's pulled back quite a bit. I think everyone could have said, getting into the macro piece, everyone could have said valuations for a lot of things were stretched. I got dragged through the mud saying Palantir was overstretched, but even still, I think there's a lot of opportunity things. But I think where you're going to see if this continues, I don't have a crystal ball. If I did, I'd probably be on my island and too remote that I wouldn't be able to call in today. But I think what you'll see is something that I saw back in late 2021, 2022, things that actually have the moat and have the ability to continue to grow will still lose value, right? Things like Palantir, things like Rocketlab, even though they are quality businesses, will still pull back maybe even further from here.
Yeah.
But the companies that really are just being propped up on hype and really don't have significant moats and really don't have the revenue or potential EBITDA to get them to where they need to be, those are the ones you need to watch out for, consolidate out of. I think, for a prime example, Rocketlab grew 800% from its lows last year, retracing 35%. You're still up 400% if you bought at the exact lows. Congratulations to everybody that's done that, by the way. But I think if you think that a company might not have a moat, like Rocketlab is the number 2 most launched vehicle in the Western Hemisphere for space, that's a moat, in my opinion. They're only second to SpaceX, if you say that. Is the other business you're holding comparable to that, right? Yep. And my thought process is it's an opportunity for you to consolidate into names that you've done well in, use those funds to say, you know what, I've made money in this. Let me focus it in better bets for the long term. Now, that's how I invest. I'm not a trader, although I have done some good moves over the past few weeks with trades. I'm more of a long-term guy. Whatever money I made in SMCI, I put into Rocketlab. Any money I made in, I forget what it was the other day, Celsius, that run up after earnings, I put that into Venture Global. I always am thinking about how to get more money to invest in my long-term plays, because that's where the wealth is, right? It's all about getting the cash to invest in the things that will be long-term appreciating stocks. So anyway.
No, I agree. We got a minute left until the market closes, folks. We got Dell, Redfin, HP, Transmedics, Archer, Monster, Duolingo, and obviously Rocketlab earnings that we should be getting right after the bell. Also, the poll says 66% of you think Rocketlab is going to dump. 34% of you say it's going to pump. We also have money market data. I'm making a new poll right here in the chat. Money market inflows. Did they increase or decrease? I will get you guys those results just after the closing bell. And we're going to try to analyze how this market closes as we get into what seems like one of the nastiest days of February, with NVIDIA falling a whopping $200 billion, 8.4% on the day. I guess the bright side is that February is going to be over in about a day, and then we will hopefully be able to move on.
Who are you keeping your eye on? Is Rocketlab your big one for today?
Yeah, Rocketlab's the big one. This is the one that everyone's excited about. I'm excited about it as well, and we'll see how this plays out. 4 p.m., February 27th, Thursday. Thank you, everybody, for being here. The stock market is now closed. All right, here we go. Let's go through some of these big names, how they ended, and then we'll get into earnings. NVIDIA down 8.4%, Palantir down 5%, Robinhood down 0.14%, Baba down 2%. FXI, China was down another 0.97%. Vistra and VRT took it on the chin today. VST down 12.2%. VRT down 6.29%. You had Nebus Group down about 10.92%. You had Grab that was down about percent. Tesla 281 that was down 3% on the day. Amazon was down 2%. Google is below 170, 168. Sundar Pichai did announce that Waymo is now doing 200,000 paid rides a week. That's a 20x increase over the past 18 months. 168.5. That's down 2.4%. Meta as well down 2.29% on the day. Matt, do you know if we get these numbers immediately or it's kind of 410, 415 when we get them?
I believe it's about 4:15, maybe later. It might actually be 4:30 because the earnings call is at 5.
Okay, so then we'll have some time to kind of see how this plays out. On top of that, we got Dell, Redfin, Transmedics, Archer, Monster, Duolingo, and also Soundhound. Let me add that to the list. We should be getting numbers for all those pretty soon. Matt, what do you think happened to money market funds? Do you think we increased or decreased?
Ooh, money market funds. Increase, decrease. I think people are probably taking their money off the table. So I wouldn't be surprised with an influx of capital out of the markets with things with tariffs and with respect to interest rates maybe getting a little bit crazier. People focusing more on low risk. And with that, I think putting money back in the money markets while we try to figure out some things.
Okay, well, Duolingo's down 3% already. Redfin's down 5%. Money market funds, folks, for anyone who said increase, you were right. 60 billion increased in money market funds. This is the highest in over 7 weeks. 6.97 trillion in money market funds. So you were completely correct, Matt. People are putting money back into a 4.5% safe money market fund over the equity markets. So
interesting.
Yeah, that definitely didn't help equities towards the latter half of February.
Are you being cautious? So Tom Lee earlier in the week said he thinks it's a short term. He thinks it's a good opportunity to add a little bit. I personally think he's right. I think it's an opportunity to choose. You don't know if it's going to go down more. You don't know if it's going to spike back up. To me, if I had the cash, I'd be investing a lot more. If this was middle of next month, man, I'd be ecstatic because I get a nice influx next month. But unfortunately, cash flow is tight this month. But yeah, what are you doing?
I agree, dude. I think at the end of the day, a lot of this is caused by a growth scare. I don't think we're actually gonna have a growth scare. And as long as we don't, now in the short term, it's gonna be a little annoying. But once that growth scare disappears and inflation gets back to normal, then I think this ends up being a good buy the dip simply because I think we're still in a bull market. But I can understand the bearish trends that are going on right now. Here's a quick update from the Fed, guys. We don't have any numbers on earnings. I'll be pulling those up in a second. But this is what some of the Fed presidents said today in regards to inflation.
All those claims today, but Patrick Harker, the outgoing Philadelphia Fed president, saying that inflation remains elevated and the progress towards bringing it down has slowed. He said it has taken us on a bit of a bumpy ride. The policy rate, however, he says is restrictive enough to continue putting downward pressure on inflation. That tells you he's not in any hurry to change things either way. More on that in just a second. He goes on to say that outside factors are creating uncertainty, including changing policies in Washington. But he won't be moved by 1 month's inflation report. He points out that January has surprised him not in the past 10 years, and he is optimistic on growth. Earlier today, Jeff Schmidt, the Kansas City Fed president, said elevated uncertainty might weigh on growth, and the Fed could have to balance inflation risks against growth concerns. A bit of a stagflationary concern there. Meanwhile, Beth Hammock from Dallas saying the Fed is likely to hold rates steady, quote, for some time. All of this somewhat hawkish talk, or at least patient talk, running up against where the futures market is priced, Scott. If you look at Fed funds futures, they brought forward their expectations for rate hikes. Now seeing a first cut pretty well priced in for June, solidly for July. And then that second cut has come, well, pretty far forward from January now all the way to September with a decent probability.
So obviously the Fed is pricing in a little bit more of a chance of a cut, but it might be more of a bearish cut versus a bullish cut if they think the economy is breaking. And I guess we're going to see how that ends up playing out. Still no earnings after the bell. I think we do have some numbers on Autodesk. So Autodesk earnings, they beat 229 versus 214 on EPS. That's about a 15-cent beat, and then 1.63 billion versus 1.63 billion in expectation. So that's a beat on revenue. Autodesk, ADSK, that stock is up 8%. So that one's getting some love on a double beat. Rocketlab, I believe you guys said in the chat 415. So we've got about 10 minutes till we get those numbers. The rest of these companies, no numbers are out yet. Matt, on the upside of Rocketlab, if they or here's a better question. What do they need to do to gap up 10% on this earnings report, in your opinion?
To gap up 10%, I think, I think it's in the realm, right? I don't think it's something that's unattainable to be gapping up. I think there's a lot of catalysts that unfortunately showed up in the January timeframe that unfortunately won't show up in the bottom line numbers. So if people are able to be okay with, and I guess this is where it gets into algos versus, and feel free if anything pops up to cut me off, like TMDX, if you want to cut me off there.
Yeah, we don't have those numbers yet, but I'm getting them, guys.
So there's a lot of things like the NASA contract in January, the Kratos contract in January. Those things aren't going to hit the backlog yet, right? So I think what a lot of people are starting to get scary and weary of is we're at a $450 million run rate. We're going to enter the fourth quarter or end the fourth quarter with $125 million in my estimates. So hopefully by next year, starting to get to a run rate about $150 million a quarter. Well, the backlog's only at $1.1 billion right now for Rocketlab. We'll see where we end. Is it 1.2, 1.3 for fiscal year 24? But we don't know unless they allude to, sometimes they've done this, a forecast as of today, what the backlog looks like, and they're allowed to do that, and so they're going to state, the wins that they got in January, the win that they got for the NASA Neutron contract. Are they going to be able to state, about how much that impacts the backlog? If they can, there's really good progress. We're literally about to land on the moon with Rocketlab software for Firefly. The Blue Ghost is literally 2 to 3 days away from making that last and final loop around the moon before it lands. There's that. There's a lot of good catalysts. I think the thing that's going to be a deterror is if we miss for some massive reason, which I don't really see on revenue missing too much, or if gross margins decline way less than 30%. But really, it's in my opinion the Neutron readiness and if we're going to get there, or if it's pushed back significantly.
All right. Dell is out. That's up 4%. So Dell has a beat on revenue or a beat on EPS, a slight miss on revenue. Nothing too crazy. Very slight miss on revenue and about 16 cent beat on EPS. That stock is up about 2% right now. Transmedics, I don't have their numbers yet, guys, but they're up 15%. I imagine they beat. No one has the numbers yet from what I'm seeing, but looks like the street's excited. That stock fell 50% last quarter on earnings. So any piece of good news would be helping them. Elastic also had earnings today. This is a cloud search engine type of company, enterprise search SaaS company, if I'm not wrong. 63 cents versus 47 cents. That's a beat on EPS. 382 versus 368. That is a beat on revenue. ESTC is the ticker. That's up 20%, 19.25%. So that one, market cap of that is about 10 billion. So not a super small cap, but definitely not a big, large cap. And that one in the SaaS space is up 18%. Don't have any numbers for Archer, even though I don't think we're going to get numbers for Archer, but Archer is up about 2%. Monster's up 0.5%. Duolingo's up 2.4%. Rocketlab, again, we got about 7 minutes until we get those numbers. Soundhound is up 4%. Don't have their numbers yet. We should be getting it soon. But those are some of the earnings we have right now. Here is what we have for Autodesk, and then we'll keep going from there.
Guidance, EPS came in at $2.29 adjusted. Street wanted to see $2.14. Revenues, let's just call it mostly in line, $1.64 billion versus the 1.63 expected. Guidance is also above expectations for the first quarter. However, there is news here confirming some layoffs of 9% of their staff here. We see shares up about 5%, though I did see them.
All right, here's Dell.
Mixed results. Earnings per share of $2.68 adjusted beats estimates, but revenue of 23.9 marks the second consecutive quarter of misses. Its fast-growing ISG category, which includes AI servers, came in below estimates. However, the COO said deals booked with XAI and others put Dell's AI server backlog at roughly $9 billion as of today. The Client Solutions Group, which contributed over about 50% of revenue and includes traditional PCs and servers, also saw sales slightly below estimates. Dell is issuing a restatement, though, for this segment after certain employees overstated the cost of goods sold by approximately $148 million in the just completed fiscal year, as well as $200 million in the previous year. The company, though, says the impact is not material, different from what we saw with Supermicro. Guidance, mixed bag, Q1 revenue light, full year revenue guidance in line, full year EPS, earnings per share above. Management raising the annual dividend by 18%, announcing a $10 billion buyback increase. Could be helping that stock pop. Shares up about 4%. John.
I think that's the only reason Dell is up. If they're buying back $10 billion worth of shares on a day like this, that's probably why they're green. Soundhound, 0.05 cents on an EPS beat versus 10 cents expected on a loss, and then 34 versus 33.7 million. That is also a beat. Soundhound is up 6%. NVIDIA did sell out of their entire stake of this company, and that's why it fell about 25% last week, but this one with a double beat on earnings as well. Archer's at 5 o'clock. Okay, cool. So we're not going to get Archer numbers for a bit. So far, Soundhound's up 7%, Dell's up 5%, Archer 1%, Duolingo's up 5%, TMDX, the winner right here, up 13%. Open Door, I didn't even know these guys were having earnings. They're down about 7% right here. I'll try to get their
numbers. They're back below $1.50 a share. What happened to them?
Dude, you might be able to buy out the company instead of buying out houses, just.
What do we got? 1.1 billion? That's I don't got that.
On, bro, for Maddie money?
I don't have that AK media money, man.
For Maddie money, 1.1 billion? That shouldn't be too much. They're down 4.9%. I actually thought about this one. I told everybody a couple months ago, I was discussing it with Steve, and we looked under the hood for their gross margins, and it was disgusting, dude. It's like 2%, 3%. They have a tailwind of real estate and rates coming down, but they can't make any money off of it, which is why they're trading at 50% cash right now. Stock down 7.64%.
We are seeing some movement in RKLB, my friend. I don't know. I haven't seen any numbers, but maybe it's running across the Bloomberg terminal as we speak.
You are right. We are up 3%, 2.3% on RKLB, touching $20.48. Maybe the terminal likes it. Maybe it's a head fake. We should get answers soon. But
my thought initially was, nothing too crazy with the earnings. So my thought, the algorithms would actually take it down, and then what would take it up would be the actual conference call itself. But I'd say it's rather flat at the moment. So we'll see.
Okay, put a 1 in the chat if this is you before Rocketlab earnings. I know it's not you, Matt, because you're used to just buying the dip. You don't really care that much. But for some people who probably bought it at 35 or whatever, 32, they're probably a little upset right now and scared.
Yeah, I've had a lot of people reach out to me, man, and it always goes back to understanding why you get into a stock and what the time horizon is and what your exit price is, right? I mean, I think just like SMCI, right? I was expecting it to get to $60. It hit 60. So even before we got the 10K out and the actual, I was like, you know what? I'm taking the majority of my profit here. And look what happened. It was a sell the news event. And so you really got to take this opportunity to be like, hey, my calculations, I know it takes a little bit of effort, but really it's going to give you that conviction to hit the sell button when you need to. And I don't plan on hitting the sell button here on Rocketlab unless there's really a fundamental change, and so that's the thing. I think this is a $50 billion company with what we know today. And there's things in the works that I think could easily take it to 100, but we haven't hit that threshold yet. So for me to be taking profit at $12 billion, $15 billion doesn't make sense.
Yeah.
So.
Yeah. Our good friend Chris Patel tweeted this just now. All gains since Trump got elected on the NASDAQ gone. Matt, and you don't have to get too political about this, but do you think the Trump tariffs is a necessary part of his agenda that is par for the core, or do you think it's actually messing with the economy really badly right now?
I think, how do I say this? Unfortunately, and this might get me dragged through, which is fine. I am okay doing short-term pain for long-term gain of America. And so if that means that we have to stick up to our friends that have been able to roll on us over the past 4 years and maybe even a couple decades, I'm all for it. I think that we need to get our fair share of opportunity, and we need to stop focusing on others first and focus on us and bring back as much as value as we can.
We're down, Matt. We are down. I think that's the actual result. Not to cut you off, but we are down.
Very good. No worries.
6% right here on Rocketlab. There she goes. Look out below 415. This is when the number should be coming out. We are down about 7% right here. If anyone in the chat can get the numbers first, you can put it in the chat. I'm going to look for it myself as well.
Yeah. And with that, I am going to kick off my stream. So I appreciate you. 6% down, 11% down now. And I'll hopefully check in with you a little bit later, my friend.
Yeah,
Thank you for having me on.
let me link Matt's stream. I'm not going to be listening to the call, guys. You guys can listen to it with Matt. And for those that want to go to Matt right now, you can go to this stream here right now. And you can either watch the red with me or watch the red with Matt. Either way, we're watching the red. So we are down 15%. Oh my gosh. Oh my goodness. That is kind of red. That is kind of red. As Spencer says right here, ramen for dinner. I don't know if ramen is actually cheap enough, baby. This one is red. It got a little bit of a green candle at $16.05. Now finding some support. Well, I shouldn't say support, but finding a little bit of just momentum at 17, but still it is green, or it is red. Let me see if I can get the exact numbers right here. I see some of you guys have it in the chat. Rocketlab right here. Looks like they missed, I think, on revenue. No, they beat. They beat on revenue, and I think they missed on the guide. So 10 cents a share they lost. That's what was expected. And then 132.3 million versus 130 million. They beat by 2.3 million. So they beat on revenue, beat on EPS, or they came in line with EPS. But something is getting the street to be a bit not happy, I guess, about Rocketlab. Matt's channel, I'm going to share it right here. You guys can go to his channel right now if you want to watch it with him. And when he starts the call in about 30 minutes, you guys can listen to it over there as well. Wow. Okay, so what is the street upset about? What is the street upset about? Down 17% right here. Now it's down 12%. A little bit of recovery from 17 to 12. Seems rather aggressive for a double beat, but something, again, on a day like this, it just sucks that they had to report on a day like this, but that also is not helping. But that violent of a reaction seems like there's something they said that the street does not like. Let me see if I can pull up their exact press release. This was, it was forming a nice level at 27 to 29, almost for 3 weeks. It was just staying there, and then everything kind of got hit. Don't have the results on the website yet. We should be getting that soon. Do I have this? Is this it? Q4 press release? Is this it? Today's February. Oh, no, I got it. All right, cool. Here we go. Let's see what we got. Rocketlab, slight recovery. Now it's down 11% instead of down 17%. So you got some buyers stepping in at that 1650, 1750 range. Here is what the company said on their earnings. Rocketlab founder and CEO Peter Beck says 2024 was a record-setting year for Rocketlab with our highest annual revenue increase ever posted of $436 million and a record Q4 revenue of $132 million, a 382% increase compared to Q4 2021. Our first full quarter following our debut on the NASDAQ as a publicly traded company. Top achievements across launch and space systems include a record number of 16 launches for Electron in 2024 and more than $450 million in newly secured launch and space systems contracts. We rounded out the year with significant advancement across the Neutron program ahead of a planned debut in the second half of 2025. That's bullish. The short report from Bleecker Street yesterday said Rocketlab's not going to do Neutron till 2027. So in the first paragraph of the press release, Peter Beck is saying, nope, second half of 2025 is going to be the debut launch of Neutron. So that doesn't seem bearish to me. The company's strong performance across launch and space systems is foundational to Rocketlab's momentum towards delivering its own satellite service as a truly end-to-end space company. This has been bolstered in Q1 of 2025 with the introduction of our new Constellation-class satellite program designed for mass manufacture named Flatline. Revenue, they're expecting for Q1, 117 to 123 million. I don't know what the growth rate is on that. Someone can tell me in the chat, but I believe it's above 30%. GAAP gross margins between 25 and 27%. Non-GAAP gross margins 30 and 32%. GAAP operating expenses between 93 and 95 million. They are not going to be profitable in Q1, it looks like, but they think they'll have an adjusted EBITDA loss of 33 to 35 million, which means they're getting close to profitability, but it's probably still going to take a couple of quarters to get to GAAP net income. We're getting back up a little bit. It was down 17. Now it's down 7. Some progress. Not too bad. Transmedics still up 11%. HP is down. Redfin's down 12%. Dell's up 4%. Soundhound's up 9%. Autodesk up 5%. Open Door down 6%. Duolingo up 1%. Monster is flat. Archer's up 2%. And Rocketlab is down 6.68%. Does anyone have a theory why the stock tanked? What got the market scared about this one? I don't think I understand the company well enough to read their press release like I just did and try to see or pinpoint the reason for why it's down. I think how much revenue did they do? Rocketlab revenue Q1 2024. Because I think we can calculate this real quick and see. So Q1 2024, they did in revenue. They're expecting 120 million for 2025. They did okay, their website doesn't clearly state it. So hold on, let me get to the right one. Yeah, because if that growth rate is lower than expected, that could be an issue, but I don't think it's that much lower than what they were arguing for or what they guided for last quarter. It seems to be in line with their guidance right here. Yeah, I mean, the market red is also not helping it, obviously. So that's definitely getting hit. Trump just was talking a couple of minutes ago when I was live with Matt with the UK president. I'm sure he probably said some stuff that also got the market pissed off, probably about tariffs. We'll try to pull that stuff up in a second, but he was just live as well, having a conversation, and we'll see what he said there. And if anything there turned off markets as well. Let's get HP earnings real quick, and then let me get these Rocketlab numbers and pull it up.
You can see that stock up now 17%. Well, HP earnings are out. Seema Modi has the numbers. Seema.
John, quarterly earnings from HP came in line with estimates at 74 cents adjusted, while revenue beat street expectations. Here's where it gets interesting. Guidance for the full year is at the midpoint of the range. The company says its outlook does factor in the added cost of U.S. tariff increases on China. HP adds that by the end of fiscal year 2025, more than 90% of HP products sold in North America will be built outside of China. Worth noting, the company has been adding production sites in Thailand, Mexico, India as well. I did catch up with CEO Enrique Lorez, who says AI PC market is showing remarkable momentum with its EliteBook Ultra named the best laptop at the Consumer Electronics Show. On the whole topic of the PC refresh, John, he says companies are realizing that they do need to upgrade their install base, and that is reflected in the growth that they're seeing on the commercial side. On DeepSeek, the CEO adds that the Chinese AI model, he says it's confirmation that simpler models will be able to deliver a lot of value. So he's under the impression that DeepSeek bodes well for the broader software sector. Let's take a look at the stock. You see it was up about 1% in overtime, John.
All right. Seema Modi, thank you.
Okay, so Rocketlab in Q1 did 93 million in 2024. They're guiding for 123 million. So that's a growth rate of 34% that they're guiding for. Unless that's a weak guide, Rocketlab now down 11%, not really finding that much support around that $18 range. Unless the street wanted 40% growth for Q1, that could be a reason why the street's upset. They can't be upset about Neutron. Neutron's happening by June or after June, but second half of 2025. That's what the press release said. So that can't be something they're mad about. So I don't know the exact specific reason why they're upset right here. Now we'll see. Look, this is after hours action. We're going to see over the next coming days what happens. The broader market's definitely, just gone to shit today. So on a day like this, it's definitely not going to be fun. Maybe over the next coming days, Rocketlab has a reversal. The broader market has a reversal. It's hard to judge it right off this action. But as of now, 14% down. The street is upset about something in the guide that they're not seeing as good. Another thing about Rocketlab, dude, they're unprofitable and they're a growth stock. And in this environment currently right now, when Verizon is green, yeah, if money's going to Verizon, it's not going to be in the Rocketlabs, the Palantirs, the Robinhoods of the world, and it's going to rotate. So there's a natural rotation probably happening off people that are a bit scared of being in these high-flying growth names. Duolingo's up 1%. Transmedics right here up 10.76% here right now as well. Yeah, it's speculative. I mean, at the end of the day, Rocketlab is absolutely, it's not, it's not Google. Granted, that doesn't mean much because Google is getting hit as well. Google back up to 170 after hours. Where's NVIDIA after hours? 120. All right. So it ended the day at 120. I think it peaked below 119 after hours. Now we're at 120.75 right here on NVIDIA currently right now. Tomorrow's also Friday. And, Friday we tend to get a market sell-off, options expiration. So tomorrow we're going to see what happens as well. AMD below 100. Yes, that is not fun, but AMD also the poster child of getting wrecked right here in the broader semiconductor trade. All the semis really took it on the chin. NVIDIA right here. I mean, TSM, Broadcom, Qualcomm, all of them down about 4 to 5% of the day. NVIDIA down what looks like about 175 billion in market cap. Do I still have my puts open? Yes, I have my puts open for $22. Rocketlab, so they're underwater right now. Those have a March 28th expiry, so they do have time. You know, we have about a month to see if we can do a rebound over 22. If it stays in this range, I think I'll be able to roll them. I wouldn't mind getting assigned about 10 of them. I sold 20 of them, so we'll be able to navigate it. Now, granted, if Rocketlab gets to like $10, yeah, those puts are going to be deeply in the money. So we're going to see how this one plays out. Right here, down 12.4%, 1746, bottomed at 1605. So people stepped in at 16 after the call. We'll see if people continue to step in or not. And then tomorrow we're going to see if this thing can rebound back up to 20, maybe get back above 22 in the next month, or if it continues to stay at these levels below. PCE tomorrow as well. Yeah, I mean, that's another one. When we get PCE tomorrow, if that's not good, I think we're going to have to see. Now, the good thing is the market has declined so much towards the past couple of days that if PCE is like bad, I mean, how much more does the market really fall down? Or is that the next big catalyst to take it down? Or is that one of those things where the market's like, all right, we kind of priced this in because we knew it was getting bad. Money market funds, for those that are just joining, 60 billion of an increase. So obviously we had some risk off over the past week, past 7 days. $60 billion said that they were going to leave equity markets, crypto markets, risk on assets, and go into something much safer, which in this case is a money market fund giving you a guaranteed 4.5%. Archer numbers are not out yet. I don't have any results from them. Let me check their website real quick. They don't really report numbers anyway. So, oh, do I have it? I think no, never mind. I do have it. All right, so here we go. Archer announces fourth quarter results. As you can see, there's no numbers. There's just losses of operating expenses because they don't have any revenue. So here's what they said they did. They unveiled the Launch Edition commercialization program with Abu Dhabi Aviation as its first customer. They're eyeing strong demand in the defense market and beyond for its planned hybrid aircraft that is developing under an exclusive partnership with Anduril. They're starting production of their first Midnight craft at its ARC facility in Covington with plans to build up to 10 Midnight aircraft, maintaining one of the strongest balance sheets in our industry with over $1 billion in liquidity, all while spending remain relatively flat for the second straight quarter. So no revenues, no profits. Operating expenses are flat. They have $1 billion in cash, and they have some partnerships. That's basically what you get from Archer's earnings. And that's it. And that's why if you invest in Archer, you gotta be able to invest in a company that really is not going to give you that many results because, you know, they're still a baby. They don't have these results yet. Archer right here down 5%. Looks like the street doesn't care too much about those results. Rocketlab down 12%. Duolingo down 2%. Let me try to get Duolingo's results and see what we have here. Duolingo is a consumer platform for learning languages. I tried to download the app the other day, but they didn't have an option for learning how to be funny. And, you know, I realized I'm already funny, so I probably don't need to learn that. So there was no purpose to me for the product. But I do know tens of billions of people use it every month to try to learn a little bit more about it. All right, we have the CEO of Duolingo. Let's see what he had to say about these earnings.
And we just released our Q4 results, and I thought I would share some highlights. We had a great Q4. We hit 40 million daily active users, and that's growing at 51% year over year. We hit over 270 million of total bookings. That's growing at 42% year over year. And we hit a 25% adjusted EBITDA margin. All of these are records. 2024 was a great year for us in terms of the product. We had a number of really amazing features. Friend Streak was one of them. About a third of our daily active users are now on a Friend Streak. Also, we had a video call, which addresses a real life learner problem, which is practicing spontaneous conversation. And in terms of marketing, we also had a number of home runs. We finished the year with an amazing campaign that we collaborated with Netflix, which was on Squid Game. And this was one of the many reasons why Ad Age named us Marketer of the Year.
He does look like he's being held hostage. That is one of the more awkward earnings updates videos that I've seen a CEO do. But Duolingo right here. So 40 million daily active users. I mean, that's pretty damn incredible. That's up 60% year over year. Stock right here is down 2.7%. Duolingo is up more than 100% over the past year. So they've done very, very well. But another growth stock that is slightly profitable, but obviously is not as safe as some of the other names that are out there. Soundhound up 12.4%. They had a double beat. Looks like the street likes that. Rocketlab continues to decline, down 14%. Archer right here, now down 10% after their earnings as well. Rocketlab tweeted, or let me go to their page. You know, Peter Beck should do some of these videos. They're actually, I mean, I think he would be strong to like communicate with everybody. They did say they have a new launch contract. That's now 8 missions lined up for Electron for QPS Inc. to deploy their Earth imaging constellation. And they're tweeting a little bit right here about Neutron, which looks like Neutron's not going to be delayed till 2027, given they just tweeted about it. I'm still confused why that stock's down 15%. It's got to be something with the guide. It has to be something with the guide right here that's getting people upset. Yeah, they're getting hit. They are absolutely getting hit here right now. Yeah, well, let's call Steve. Let's see if he picks up. Steve said that he definitely wanted to call in today. Let's see if he picks up. We'll get his thoughts on what's going on in the market. Again, the Rocketlab call starts at 5. I will link Matt's channel. He'll be listening to it live. We're not going to listen to it on this channel, so you guys can go to Matt and listen to it at 5, so in about 30 minutes. But it is definitely having some pain. I'll try to get some updates on what Trump said in the press conference 20 minutes ago, because that also, I think, is making some headlines right here. You're going to get a sign on the puts? Yeah, we got a month. If it doesn't get back above 22, likely will be assigned at those levels. Okay, Steve said he'll call back in a little bit, so we shall get Steve on in a second. My SoFi covered calls are in the green. Well, that's the good thing. If you have any covered calls right here, I mean, tomorrow, you're going to wake up probably up 70 to 80% of those covered calls, especially on Rocketlab. I mean, if this 14% holds tomorrow, those covered calls are going to be very, very green. So we're going to see what happens there. HP still down 3%. Archer down 3.9%. That's recovering a little bit. Monster up 2.85%. Duolingo down 2.6%. Soundhound, really the winner of the day. Who would have thought? Soundhound up 13% out of all these companies, getting some of the momentum right here. Oh, wow. The Q1 guide was for 136 million. I did not know that. Yeah, that's probably the reason they're down. The street wanted 136. Rocketlab said we're going to do 123. That is a 11 million miss in terms of expectations. Yeah, that'll do it. I didn't know 136 was the guide. I thought it was a bit lower than that, but if they expected almost 140 million, yeah, that's not the best. Rocket Mortgage, did they have earnings today? Rocket, they're up 8.73%. All right, looks like they had earnings as well. We'll try to get those numbers. But the big one right here, Rocketlab, is definitely getting hit. For those wondering why NVIDIA, again, is down, if you missed the beginning of the show, Sam Altman released OpenAI's GPT 4.5. The problem is when you run it through the benchmarks, it's not substantially better than 4.0. But they spent a lot more money to build it. And so a lot of people are kind of wondering, are we hitting a wall when it comes to scaling for these models? And if that's the case, is that going to be something that significantly disrupts the broader AI thesis? I don't think that's necessarily the case, but that could be a reason for why the market is at least questioning what's going on with the entire semiconductor ecosystem. Duolingo missed on EPS, 28 cents versus 48 cents. So they are profitable, but they missed by 20 cents right here. They beat on revenue by 4 million, 209 versus 205. That stock right here is down 3%. And then Archer, apparently revenue expectations were $200,000 and they came in at 0. Expecting 200,000. I don't even know why those expectations are even there. 30 cents of EPS. The street wanted them to lose. They lost $1.69, so that's a double miss. I think the street kind of knew though that they were going to get hit regardless. And then we had Transmedics. We had a beat on the top and the bottom. 19 cents versus 15 cents. That's a 4-cent beat. 121 versus 109 million. That is a 11 million revenue beat. Transmedics as well is up 10%. Soundhound's up 14%. Autodesk's up 5%. Rocket Mortgage up 9%. Rocketlab is down 15%. Yeah, they couldn't make 200,000. Why would you even expect them to make 200,000? Like, this is a startup that's public. So that's so weird that they even had those expectations. But Archer right now down 7.2%. Dude, this is nasty. This is definitely nasty. All right, let's try to get the Trump update. What did Trump talk about in his press conference? I'm sure he probably mentioned tariffs What do we have? What do we have here? Okay, here we go. I think we have a couple clips. Let's see if I can get something right here.
Persuade you not to put tariffs. Did our Prime Minister persuade you not to put tariffs on the UK? And if I may, Prime Minister, do you think that Vladimir Putin is a man who will keep his word? Thanks.
He tried. He was working hard, I'll tell you that. He earned whatever the hell they pay him over there. But he tried. I think.
Well, that's how the press conference went. Oh my gosh. All right, let's I got a couple other updates with Trump about tariffs. Let's listen to this. Looks like that's another update we have on tariffs here.
To persuade you not to impose tariffs on the United Kingdom.
Yeah, did I use the word that you said, that bad word?
I think so.
Well, I think that the EU, I've had problems with the EU because, and we're not talking about, we happen to have a great relationship with you, but we do have problems with the EU because they've tariffed us. They do it in the form of a VAT tax, which is about 20%, and many other taxes. They sue our companies. They sued Apple, got $16 or $17 billion, which was, I think, totally a ridiculous decision. And they're suing Google for a lot of money. They're suing a lot of other companies. And we don't like the way they're treating our people now. We don't like the way they're treating our companies. They sell us cars. We don't sell them cars. They don't take our cars. They don't take much of our agriculture. And we have a deficit with them of about $350 billion. So I wouldn't say it's been such a great relationship personally, but other people did because it's politically correct to say that it's been good, but it hasn't been good. And we're going to change that. And we are going to have reciprocal tariffs. We're not going to have tariff. We're going to have reciprocal. Whatever they charge us, we're going to charge them, which for many years, foolishly, I would have done that. But then all of a sudden we had COVID and we had other things to think about. So it took me a little while to get that on. But we had, in my first 4 years, we had the greatest economy in the history of, I think, the world, but certainly in the history of our country. I think we're going to have that again. But the EU was very, very tough on us from the standpoint of trade. Then you could take it a step further and go into NATO. And that was a very tough situation for us. I mean, that's been a very tough situation because we were paying a disproportionate share and it wasn't good. So, as you know, they paid.
All right, so kind of the same rhetoric from Trump on tariffs. I guess none of that changed the narrative after hours. And if he's doubling down and the market is upset with tariffs, then that's what we're seeing. Let's get an update right here on momentum versus some of the value names, and then we'll keep going from there.
Offensive strategies had really gotten pretty stretched relative to defense. So this is the high momentum part of the S&P 500, the momentum factor, so to speak. On a one-year basis, it really did start to accelerate relative to dividend stocks. So this is basically the core dividend large cap strategy. You see still a big performance difference on a one-year basis, but they have started to come together this month so far. Dividend stocks are kind of holding their value. Now, bonds beating stocks, especially long-term treasuries, on a year-to-date basis, but this is how different the performance is opening up in the latter part of last year. So probably some convergence there is sort of still on the table. We'll have to see. Now, two-year treasury yield, this is where the debate about whether we're seeing an economic growth scare really comes to the fore. It's down around just above 4%. And if you just sort of draw where that is, there was this trough in the fall when we really did, late summer into the fall, really thought that high yields were going to crush the economy. The Fed was going to be behind the curve because remember, they hadn't yet pivoted toward easing yet. And that was really when we thought that maybe we had another recession possibility on the off. It didn't happen, obviously. Yields went back up. But if it really starts to go down, it's going to basically put the Fed on notice that the market is starting to think they should be in easing mode. We'll see if that does develop from here, John.
Mike, we just got the last huge earnings report in NVIDIA, and it looks like we're closing February pretty much to flat for the year.
Yeah.
After January was good. We're still in this range. What does that say?
It's interesting, John, because if you came into the year, one plausible set of premises that I might have been saying is, look, everything looks good, but expectations are high. Everyone expects earnings to broaden out. The most concentrated, big cap stocks have done great, even though their fundamentals are fine. We should broaden out and maybe expect some choppiness in the first year of a new administration, which almost always happens. Latter part of February is often weak. In other words, all the stuff that's happening is pretty much according to the book, or at least shouldn't be very surprising. I do think that it just shows you there was room for valuation compression in the biggest stocks.
And we are definitely getting that valuation compression now, given the market is pricing in a little bit of a tougher time when it comes to tariffs and obviously what that means for inflation. In terms of NVIDIA, I see some comments here. Are you selling NVIDIA? No, I'm not selling NVIDIA, dude. I think the NVIDIA sell-off is one of the most ridiculous things ever. Again, I can understand why it's happening, and my simple response to why it's happening right here is based on what we heard in the morning. Two things. Number one, export controls. No one has an answer on what's going to happen with tariffs, and no one knows what implication the tariffs are going to have on NVIDIA, if they're going to crack down on Singapore even more than they've done before, and then NVIDIA loses more revenue. So that could be an issue. And then number two is this news we got after hours about OpenAI's model not being as good as people thought it was going to be, which then signals, is OpenAI going to even need to buy more GPUs from NVIDIA if they're hitting a wall when it comes to scaling? Now, granted, Sam Altman literally tweeted, we are getting ready to buy another couple 100,000 GPUs as soon as possible to be able to handle the demand that we know is going to come into GPT 4.5. They now have 400 million monthly active users. So I think it's a little bit of FUD. I think it's really not that serious. I mean, it felt in the morning that they were getting ready to give us the dip, and they have definitely given us a dip on NVIDIA right here at 120. If it goes to 113, that would be worse than the DeepSeek dip. But still, like, I don't think the street wasn't impressed with that earnings. I think the street is so scared about all these other things that are going on in regards to the AI trade, in regards to CapEx, and also, quite frankly, in regards to the uncertainty that comes with Trump. And that's where you get a really scared market that sells off one of the best companies in the world. I don't think that's a reason to sell, in my opinion. I'm not selling because of that. But I can understand the volatility in the short term. I don't think a lot of these stocks are sells, dude. Like, is Rocketlab a sell down 15% after? No. Like, is Meta a sell? No. Is Google a sell? No. If you want to take short-term profits, that's fine. But is Robin a sell? Absolutely not. These are companies that are performing phenomenally. And if we assume there's no recession, which, look, if you think there's a recession, I know a bunch of you guys think a recession's coming. I don't even know why you're invested in the markets. It's like, it doesn't make sense to me when someone's like, you don't understand how bad it is. Like, things are breaking. Yeah, I'm like, okay, then sell everything. Like, I feel like there's a level of hypocrisy that is just unbelievable with people who are ready to tweet that the market is full of shit and it's bad and this and that, and they want to complain about Trump. Then sell. You should be 100% cash. If a recession is coming, everything's going to go to shit. Why do you have any money in the equity markets? It doesn't make any sense. But if you think, if you have money in the markets, and let's say at least, I don't know, 50 to 60%, you are invested in markets, then you are heavily exposed to this upcoming recession that you think is on the way. And so I think if you feel like it's getting really bad and Trump is going to be horrible for the next 4 years and everyone voted for this horrible person, then you got to sell everything and just chill out and collect your 4% that maybe doesn't go down to 2% if the Fed doesn't cut anytime soon. But if you're saying that and then you're simultaneously buying the dip or invested, you actually don't believe we're heading towards a recession. And I think a lot of the bears are coming out now and they're trying to find every different narrative to claim why things are bad, but they're not willing to sell because they probably know that Rocketlab at 17 is not the worst deal in the world, or SoFi at 13 is not the worst deal in the world. It's not 2021 when SoFi was 25 without any earnings to really justify that. Or you can do what NYC Urbanista is doing right here in the chat. I've been protecting most of my large positions with puts. You can hedge the portfolio. You can sell some covered calls, buy some puts. That also helps protect it without fully going in with no protection. But for the people that just hate this administration, hate the current macro climate, and are like gung-ho on recession is coming and admit you just don't get it, I would hope you have nothing in the markets then, because if a recession comes, everything's getting hit. Even though Google and Amazon and Meta, these are going to be companies that can withstand a recession because their balance sheets are just so strong, their valuations will absolutely compress. So even the safest trades will go to shit. Not to mention the risk on trades like a Bitcoin that will obviously get hit if liquidity dries up. But if you think that's not the case, then that's probably why you're still invested in markets. Meta pop. So Meta did have a little bit of a pop after hours. Meta's working with Apollo to finance $35 billion of data centers, which again, so this is the thing about these headlines, right? When you see people saying, all right, well, NVIDIA has a demand issue or NVIDIA is not going to be able to scale or NVIDIA is cyclical. And then you see Apollo coming in and saying, hey, we're going to finance Meta with $35 billion to build more data centers because we think there's plenty of opportunities here to engage in the widening or the broadening of the magnitude on this AI CapEx cycle. A lot of this money ends up going to NVIDIA. So I just think there's a lot of fear, and this fear is meaningful fear. It's healthy fear. It's fear that we need in a market. It's what makes a market, but it's also fear that's driven by 2 weeks of nonstop tariff talk and the worst seasonal period of the market in history, right? Because every February tends to be historically horrible. And you get all of that compounding on each other with Trump saying what he's saying. Yeah, you're going to get a lot of nasty reactions to what's going on currently right now in the markets. S&P is down year to date. Let's take a look at the S&P, which has been holding up. Well, okay, so yeah, basically flat. My Google Finance sometimes has it a little bit off, but we're up 0.07% on the SPY. Let's check SPX. That's down 0.12%. So it's down now year to date, gave up the 4% gains that it had in January. This is why it's so hard to beat the S&P, because you think it's up 1 month, 4 or 5%, and then it comes right back down, and it oscillates, usually averages out around 8 to 9% a year. But you are down 0.12%. Now, other companies still are not down year to date. For example, Palantir year to date is up 12.74%. It's not up 60% anymore, but it's not down 12.74%. So I think we haven't got to that part of the cycle where everything year to date starts going red, like a Robinhood getting to like $30. That would be year to date red. But we do have the S&P that's flat year to date, which 2 months into the year, that's not that surprising that the S&P is flat. And I think that's a lot better than being down 4 to 5%. QQQ historically performs poorly in February while the S&P performs better. Yeah, I agree. Also, for the people in the chat that are saying you're not acknowledging that Trump is causing the issue, I don't know what you're listening to. I think every morning we have acknowledged, yeah, Trump saying what he's saying about tariffs is not helping. So yes, obviously Trump is contributing to this volatility. I mean, Chris went on a full rant about it, and Chris voted for Trump, right? And even he went on a rant this morning saying, hey, this shit is Trump's fault. At least the volatility that's happening right now, even if it's narrative driven, it's driven primarily based on Trump. And it's also driven primarily on Trump's inability to kind of pick a side. The fact that he flip-flops every other day is just causing a lot of uncertainty. So 1,000%, I am acknowledging this market volatility is driven by Trump. The question simply becomes, is it going to stay down for the next couple of years because of Trump? Or is this short-term pain for long-term gain? Like, I don't think Trump's the only reason why we're having some of this pain. I think inflation spiking up with CPI and PPI being up in the month of February, that wasn't good. That creates some downside pressure. Consumer confidence creates downside. Like, there's a lot of different things that are contributing here. Obviously, Trump's part of that. I wouldn't say it's 100%. I wouldn't say it's only 1%, but it's part of the issue. And I guess eventually we're going to see over the coming months how long of an issue it is going to continue to be. Let's get an update on some of these Max 7 names, and then we'll keep going from there.
To our talk of the tape, whether the momentum that sent stocks to new record highs just over a week ago is fading and fading fast. Let's welcome our panel. Ankur Crawford is with Alger, Joe Terranova with Virtus, CNBC.
Positioning towards the puts than the calls. Let's remember, this is the first earnings quarter that we have had since 2022 where NVIDIA, relative to the prior quarter, was down. It was down 9% since its last reported in November. So I'm not surprised by the price action at all. This is a moderation in revenue growth. That's clearly what it is. Now, the revenue growth is really strong at 78%. We like that. But 1 year ago, we were talking about 265% revenue growth. And if you look forward into the coming year, the revenue growth continues to decelerate. So I often say you can't have it both ways. You can't get exuberant about the revenue growth accelerating, and then when the revenue growth begins to moderate, not understand that the market is effectively going to price that in. I don't think it leads to a massive deterioration. I think NVIDIA is in a sideways consolidation range, but I think you just have to understand it's just not what it was last year.
But nor is the valuation. The valuation has come in as the stock has gone down. It's down at least 14%.
That doesn't
since its high.
Yeah, but that doesn't give comfort to the overwhelming majority of managers who are overweight this name. They're not sitting there and saying, okay, it's a cheaper valuation, so I'm going to hold hold my footing here in the position. They're going to reduce the position marginally, and I think that's what's going on.
Well, I mean, you got a portfolio manager sitting right next to you. Are you thinking about doing that?
Actually, I do think valuation does matter. Everyone knows there's slowing growth. NVIDIA is the dominant compute center that is driving forward this AI revolution. And so valuation does matter. And today, if you look at consensus numbers, it trades at about 20 times, 26. The buy side numbers are higher than that. It trades at less than a market multiple on 26. And so, you know, we're waiting for the Blackwell launch. I will bet you 2 months from now, as Blackwell starts to launch, everyone's going to get so excited that Blackwell is launching and these big numbers are going to put up that all of a sudden that 20 goes to something higher.
Don't disagree at all. And I agree with you. Valuation matters when you're thinking about investing for the long term, but trying to explain the dynamic of what we're seeing today, valuation is not in the equation of what's motivating price to move lower today.
Why haven't the mega cap stocks traded all that well? Many are in correction territory. Alphabet is down 17% from its high on February 4th. Microsoft 15, July 5th. NVIDIA down 14, as I said, at least. But I mean, as the stock is selling off here a little bit more as we head towards the close, it may be even more than that. January 7th. I mean, Meta went up 20 straight days.
It did.
Escalator up, elevator down. That stock is down near 10% from its high on February 14th.
Yes.
Why? Why haven't these stocks traded well?
I think it's difficult to pinpoint a specific explanation as to why. I do agree with Ankur. You've got a little bit of a risk-off environment. I think the three names in the Mag 7 that I would focus on for opportunity is Meta, Amazon, and NVIDIA. When you're thinking about the long term, I think there's clearly some challenges as it relates to Apple and Microsoft, and even to a certain extent, Alphabet rather. But I think it's a risk-off environment more than anything else that we're seeing here. And I think these names have been the names that over the last 2 years, the overwhelming majority of money managers have gravitated towards, not just necessarily because they desired to be there, but they had to be there. Otherwise, they're underperforming.
Yeah.
Look, I would tend to agree with that. I think his argument is that it's not about valuation because obviously NVIDIA's PE is collapsing at this point as the stock continues to go down. It becomes cheaper and cheaper. It becomes one of the cheapest Mag 7s outside of Google, but NVIDIA is growing way faster than Google. So you can make a hell of a case for why NVIDIA is more exciting than Google. PE of 29 now on NVIDIA, growing about 70% year over year. I agree with him. It's not really about valuation. It's about narrative-driven momentum to the downside that is creating a structural level of fear in the markets around NVIDIA, around the macro, around the AI CapEx trade, around big tech, and then obviously across the broader markets. Now, someone right here in the chat said that 4% money market yield is not going to last for a long time. I would agree. I mean, I don't think it's going to be 4% by the end of the year. But if it's only 3.5% or 3.75%, is that enough to get money out of those money market funds? I mean, we would have to see those rates come down significantly to start getting to the point where people are excited about taking cash out of the money market funds, or we would have to just see equities collapse, which is painful. But I mean, I think if Rocketlab goes back to like $10, people are going to get really excited, right? And there's going to be a lot of new buyers that step in, and that's when they take money off the sidelines. The question is, do we get those bad prices? And so I guess we're going to have to see. I guess we are going to have to see. Imagine if NVIDIA missed earnings. Wonder how much more we'd be down. Yeah, I mean, that's the other thing about the earnings. And by the way, Steve said he'll be on in 15, so we'll give him a call in a second. I think NVIDIA crushing earnings was good, and it at least is able to get the market to realize that things aren't bad internally, which means if the question is things aren't bad internally, things aren't bad with demand, what are things bad about? And what things are bad about is sentiment. And that's okay. Like, sentiment can get bad. After DeepSeek, everything was bad when it came to sentiment. But that sentiment-driven dip usually gets eaten up on a lot of these names. Robinhood, by the way, up about 2% right here after hours. Google up just a little bit. AMD up 0.5%. If a stock has a phenomenal earnings and then the stock drops badly, it tends to get eaten up when people realize the earnings were good, but the narrative is bad. Unless there is something so horrible about the narrative that it overdetermines the ability for the company to gain any momentum. And obviously that's not the case when it comes to NVIDIA. 438 million shares were traded today. On average, they do about 300 million. So a significant number of increase of shares were traded today on NVIDIA. NVIDIA is now below a $3 trillion market cap. Apple is the only one left at $3 trillion. Apple right here, 3.5 trillion, 237 on the day. Okay, who's scared? Who is scared right now? Who's actually feeling the pain and the fear of this market, and who else is chilling? Let's do a poll right here in the chat. Is this market making you scared? And if you are scared, why? I mean, if you guys can tell from how I'm talking about this, I'm just not that scared because I don't know. I just don't think we're in 2022. Maybe I'll be eating my words at the end of 2025, but I don't think this is one of those years where it's 2022. I think it's volatility that's inevitable, especially when something like a Palantir or Robinhood were up 65% year to date, and we're chilling out a bit. I think that's okay. Noodle says I'm scared of my wife. That's another thing. I don't have a wife, and she doesn't have to look at my portfolio. So for some of you that share your portfolios with your loved ones or your spouses, I mean, you guys got some balls, bro. That's because on a bad day, I can imagine wifey who barely or hubby who barely knows about the market sees you're down $40,000 or something. I'm like, what? We lost 40,000. Like, no, we didn't. We didn't lose it. We didn't lose it. It's just not here at the moment. It is swimming far away. It'll eventually come back. It's not here right now. And you're trying to convince someone who doesn't understand the markets. They're like, but it says negative 40,000. Like, I know what it says. But trust me, it'll come back. It sounds like bullshit, right? But like that's the actual truth. That is the actual truth. Peter, thank you for the $20 super chat. My fear is what happens when NVIDIA misses or the inevitable slowing begins. NVIDIA crushes earnings and doesn't move when negative news hits. Yikes. I am scared. Very AI exposed. I think that is fair. I think we have to balance that level of fear with the timeline. So, and I think Steve will talk about this when he comes on, but Steve thinks for the next 18 to 24 months, NVIDIA is not going to have some dramatic miss where the AI CapEx cycle goes to shit, which means we've got about a year and a half for the AI CapEx cycle to be in place and hopefully not get into the quarter, which is going to be the quarter where everything pops, right? Everyone's expecting it eventually when NVIDIA says growth is slowing down. Which means if we have those 18 to 24 months, the question is how big does NVIDIA become? And obviously I'm giving you a pseudo bullish case. The biggest of NVIDIA bulls think this thing is going to 10 trillion and we've got 10 more years left of this CapEx cycle. But if you assume, and you're more conservative, we've got 18 to 24 months left. In the next 18 to 24 months, if the narrative continues to be this bad on NVIDIA, then yeah, NVIDIA is going to be depressed. If the narrative changes because randomly in March, the market wakes up and they're like, hey, NVIDIA's cheap right here, then you're going to get volatility to the upside. And then if you want to exit the position, you'll have liquidity to get out at a better price than today. But I also think if sentiment changes that quickly, I don't know if NVIDIA has to be stuck at 120 or 130 or even 140. But it really all will be based on the narrative at this point. And obviously goes without saying the tariff discussion on what ends up playing out here. But I don't know, dude. I'm not fully convinced NVIDIA has the next 10, 15 years to keep doing this. I'm also not convinced it's only going to be 2 years. I guess I have to get a bit more educated on where this is going. But some of the biggest of NVIDIA bulls feel this is a revolution that's going to happen for a long time. And again, I should be more convinced that it's going to last for longer because if you talk to Figure when it comes to their robots, Brett thinks there's going to be billions and billions of robots, which are going to have billions of NVIDIA chips. And so there are going to be different growth curves for NVIDIA. It's just the sentiment in the moment is definitely not as bullish after these earnings. Fear and greed. Where are we on the fear and greed? We are at extreme fear 18. Wow. This morning it was 22. Look at that, dude. Quite the decline. 18 on the fear and greed index. I mean, that tends to be a signal of like, hey, sentiment is so bad. Prices probably are on sale. 58% of you said no, this market is not making you scared. 42% of you said yes, it is making you a bit scared. Style says, not that I'm scared, but I just don't know how to handle. Do I sit back and wait when I buy the dip and then lose $10 per share within 2 days? I just know how to tackle. Well, look here, my psychological perspective on buying the dip. Like I bought the dip today at NVIDIA at 125. Do I feel bad about that? No, because the whole point of dollar cost averaging is that you're never going to pick the bottom. And it's like, I feel like sometimes we, as retail in particular, because we're in charge of our own money, right? So we feel so We feel so obligated to get things right. It's a toxic mentality, because if you could find out exactly when NVIDIA was going to, make that moment where it bottoms out and then sell it at 142 last week because it was topping out, like, you'd be better than Warren Buffett, right? Like, no one can do that. So over the long term, do I think NVIDIA is above 125? Yes. Which means, do I care if I bought it at 125 or 120? No. Now, in the short term, it might hurt because I bought it and then it's down $5. As you're saying in the chat, you buy a stock and then 2 days later it's down $10. You feel like an idiot. But you also got to remember, the reason you're investing is because you are chasing a type of lifestyle that allows you to compound your assets over time, not over 2 hours like the meme coin traders, but over decades. And in decades, $10 is not going to make a difference. But I can understand how you feel like shit, because obviously if stocks keep going down, it doesn't feel fun. I just don't think people should get into the toxic mentality of like, I bought the dip, it keeps dipping. Because everyone's been in that situation, dude. Like, every single person has been in that situation where you buy the dip and it continues to keep going down. The Qs are at the 200-day moving average. So is an NVIDIA. NVIDIA is definitively below its 200-day moving average. The Qs, yeah, look at that, 500.27 down 3%. We break below 500 on the Qs. It's going to be very interesting tomorrow how those end up playing out. Where is Rocketlab? Rocketlab right here is at 18. Oh, wow. It's only down 8%. It was down 15%. Got a little bit of recovery here. Okay, so we're going to stay on and wait for Steve. I'm sending him the link right now. So if you want to stay on and listen to Steve, you can stay here. For those that want to listen to the Rocketlab earnings call, I'm going to link Matt Money's channel right here in the chat. I think that call is starting literally right now. So if you want to listen to Rocketlab, here is the link for Matt's stream. And if you want to stay and listen to Steve get pissed off about the market and NVIDIA, you can stay here as well. All right, let me send Steve this link right here, and then we'll get his thoughts. Okay, cool. Rocketlab, again, a little bit of recovery right here. Down 8% instead of down 10 or 15%. Rod says, admit my mentality is that I hold 5 stocks, Tesla, Palantir, Robinhood, SoFi, NVIDIA, AMD. I plan to hold for the next 10 years and more and only buy when it dips. Is that a good plan? Yeah, like, you don't even have to ask the question, is that a good plan? Your plan is to hold stocks for the next 10 years. Yes. Unless the United States of America goes bankrupt in the next 10 years. I think all 7 of those names, NVIDIA, Tesla, SoFi, Robinhood, Palantir, etc., will do better. Now, there is going to be ups and downs, like a Palantir going to 125 and then going back down to 85. That's just inevitable. And it's like, not only is it inevitable, it is part of a healthy market when things go up and down, but over time go up in the long term, because essentially companies can get overvalued and undervalued. But if they put up earnings growth and there's a macro environment to support that earnings growth, which if they're putting up earnings growth, there has to be, like, quite objectively a macro environment that allows them to sell products and services to the broader public, then their stock prices will reflect that. Why? Because there's too much liquidity in the stock market, definitely in the United States stock market, where people are just waiting to compound their capital into different asset classes. This is why every company, it's a dream to go public. Because if you go public and you actually can grow as a public company, it's, first of all, it's hard to do. It's like 4,000 companies that are public. There's probably, could argue, 250 of them that actually deserve your capital. But if you can do it, that's why you get paid a premium. And that's why you're able to provide liquidity immediately to shareholders over the long term as companies grow. So yeah, buy and hold is not a bad plan. But I just think everyone has to chill out a little bit if they see red in their portfolio and they're down for the year or whatever. Like, you're investing, right? It's part of it. It's part of the freaking game. In fact, I think you gotta be excited about some of these days, right? Like, I bought more NVIDIA today. I was excited. I was like, all right, if they're gonna take it down, let's take it down and let's buy more. Same thing for Rocketlab, dude. If they keep Rocketlab below 20, I don't have a real position in Rocketlab yet. I don't mind actually establishing a position, because I know in 10 years that position would be a lot more exciting than not having any allocation. I mean, what do you think of VST after earnings? I don't know much about VST. I know they're a data center play, and obviously NVIDIA got hit, so VST is getting hit. VST was up 7% in the pre-markets, then it got hit 12% right after. So my thoughts on VST are that, yeah, it's not in a good spot based on the NVIDIA narrative, but anything that is slightly correlated to NVIDIA is getting hit today. In the data center space, the semi space, anything that's a derivative of NVIDIA. Really Original says if you can't stomach 30 to 40%, you shouldn't invest yourself. Dude, I just like 1000%. I think here, this is also a gut check for a lot of people. If you cannot stomach these meltdowns, this is market's not for you, right? Like at that point, you should hire a financial advisor. They will manage the portfolio, which means you won't get any asymmetric outsized gains, but you probably won't get any crazy drawdowns. But even then, it depends on how good the portfolio manager is, because in a shitty year, you're probably going to see somewhat of a drawdown. But at least you won't have to mentally deal with it, right? But if you're going to have your Schwab or your Fidelity, your Robinhood opened up and you're going to see the numbers go up and down every day, you can't just get accustomed of it going up and up and up. This is what I've been trying to tell my dad, right? Like my dad over the past couple of weeks is down 20,000. He was at an all-time high. He's not at an all-time low right now. He's still up significantly from last year, but it's not as high as before. And he's like upset about it. And I'm like, Dad, this is not like a game. Like Palantir and Robinhood don't just keep going up and up and up and up and up for the hell of it. Like these are shares that are attached to a stock price, which then makes up a market cap, and that market cap moves every time it goes up $1. And does Robinhood deserve to get another $5 billion of market cap added today and go up $5? Maybe, maybe not. And if it's not, then it's going to go down those $5, which means your shares will go down $5, which means the company's value will go down $5 billion, and it will even itself out over the long term as Robinhood keeps executing on their performance, on their earnings. But like, that's the nature of how it ends up playing out. Your dad will see this happen a couple times and then get used to it. Yeah, I think the good thing is most people get used to it after it happens over and over again, but it's also the pain of being in the markets is you have to get used to the fact that shit sometimes hits the fan, and it is what it is. Let's get someone onto the show and see if they can help us make sense of the pain that everyone has been feeling over the past couple of days. Mr. Steven Fiorillo. Steve, how are you?
Great. How are you?
I'm doing very good. Thank you for joining us on the show today.
Why are you saying pain?
Well, based on the comments I'm seeing, a lot of people are upset that NVIDIA is down 9%.
It's going to get bought up tomorrow.
All right. Give me your thoughts, Steve. What are you thinking about this thing? Like, why is it down 9%? And do you think the market's being stupid here?
Look, I think I have a lot of thoughts right now. I haven't seen anything. I've been tied up all day, but I'm looking at the numbers, and anybody who thinks it's at 120.
It was at 119, bro.
What is wrong with people? So this is where I start to get annoyed, because people, I'm going to choose my words very carefully here. People at this point are looking for a reason to be bearish on NVIDIA, and they're looking for the littlest things to look into what Jensen said on the conference call. This is ridiculous. I'm going to share my screen. Let's actually look at these numbers. And once again, there is no reason to be bearish on this. Jensen confirmed on the conference call that all the CapEx spend that the big four are doing and everyone else is doing is happening. He confirmed that margins are going to expand in the second half of the year, and they're coming out with a new chip in the second half of the year. So why people are bearish, there's no reason to be. And NVIDIA is now the cheapest it's been in God knows how long. It is not on the right screen. Hold on.
By the way, I shared your Google Sheet with everyone in the morning, and it was great looking at the EPS estimates.
We're going to look at it a different way, though. So why is it fucking doing that? Why won't it let me go to the other tab? Let me close that one. So technology sometimes. Maybe Jen can fix that. All right. So before I tell you what companies these are, there was a little company called NVIDIA that last night reported, and basically, and I can, even though it says January 2025 because they don't report on a calendar year, this is really their 2024 fiscal year because they only did 1 month in 2025. So I just named the stuff the same. But they just put up $130 billion in revenue, okay? A 53% year-over-year increase in revenue on an annual basis. I'm not looking at quarterly numbers, just straight annual numbers, because I know 144% sounds a lot better in Q4 than 53% on an annualized basis. But really look at this. They generate an additional $70 billion in revenue this year. And then on gross profit, they generated another $53.5 billion in gross profit this year. Gross profit grew by 55%. Then profitability, net income, they generated an additional $43 billion year over year, grew net income, bottom line profit by almost 60%, generated almost $73 billion in net income, more than $1 billion a week, and people want to be bearish. They expanded margins. Profit margin last year was 49%. This year was almost 56%. Gross profit, it was almost 73% last year. This year was 75%. So you have margin expansion. You have phenomenal growth. And, oh, they're not doing triple digit growth? Great. They were already a $61 billion revenue company. You're not going to do triple digit growth when you're that big of a company. But they did over 50%. And then we have a little company that your followers are familiar with. They went haywire after earnings. And their year-over-year growth was a measly $640 million.
Wait, what company is that for everybody?
And less than 23% year over year. So you have company A, which is NVIDIA, that slaughters the market and goes down. And then company B that generates not even 23% top line year over year growth and goes haywire to all-time highs at valuations that are more than 100 times sales. And across the board, there is nothing about that company that beat NVIDIA. You start looking at, and I could care less about gross profit margins because that's only your cost of sales. You have to look at bottom line margins because that takes into consideration all your operating costs, your taxes, everything. Their profit margin was not even 20%. So NVIDIA is operating at 130 billion revenue, operating at almost a 56% profit margin, and people want to nitpick over a sentence here and the way Jensen said something there. Good. I hope it goes to 100. I hope it goes to 90 so I can just buy. I will sell so much stuff if it goes to 100 and go on a buying spree and just sit there for the next year until this turns around, because this is insane. Go back. So look at, I added Palantir, I added Coca-Cola in here. So you said you would show this, but look at NVIDIA right now. NVIDIA is trading at 27 times this year's earnings and under 20 times 2027 earnings. Okay. It is trading lower than Coca-Cola. So you're trying to tell me that people are willing to spend 45.5 PE on 2027 earnings on Costco. What is wrong with people? Seriously, what is wrong with people?
No. Can you answer the question? Why are people spending on Costco or NVIDIA? Like, what is your interpretation?
So, like I said to you last night on the phone, people think that Costco is a recession-proof company because everybody has to buy food and toiletries. I got news for everybody. The Mag 7 minus Tesla, because Tesla does not count, are inflationary, recession-proof, because their balance sheets are so insane that they can weather any storm. And this is, I hope NVIDIA keeps going down because I'm just going to buy more. This is crazy to be bearish. And I think people just bought a lot of puts and as protection. And I think that's what it was. I don't think it was anything else, because you can't in your right mind tell me that you would rather pay 46 times earnings for Costco than less than 20 times earnings for NVIDIA. You just can't. It makes no sense, especially when NVIDIA has over 40% EPS growth from the close of 2025 to the close of 2027, and Costco has 23.5%. Like, there is no logical explanation about that. Not to mention, Costco's profit is about 12 billion or so. Let me pull the exact number because it is a fraction. So not only are you paying a much higher multiple, you're talking about a company that has a 2% profit margin and they do $7.6 billion in profit. NVIDIA does more profit than freaking Costco in 6 weeks. And people want to pay 46 times earnings for Costco. That's what's wrong with the market. We are giving, and this is why I get annoyed with investing a lot, because everything is not just numbers. And I get it. You got to put other variables in there. But this is exactly why stuff like Palantir trading at 120 makes 0 cents. 0 cents. I mean, okay, cool. People want to pay 89 times Palantir's earnings right now and 151 times this year's earnings when your year-over-year growth was 23%. Like, really?
So here's a question. If the market thinks Costco is recession-proof, even if they're wrong.
It is recession-proof, but so are these other companies.
So then do you think the market is genuinely scared of the R word becoming true?
I mean, look, a recession is inevitable. Whether it happens in 2 quarters, 2 years, 5 years, 10 years, at some point, it's inevitable. I don't know when it's going to happen, but we don't have negative GDP growth.
No, we don't. We had 2.3% today.
So it may not be what it was, but it's not negative.
Okay, so why do you think the market is not believing in NVIDIA's growth story? Because down 10% to me means that they don't think it's going to continue, right?
I think all the sellers that really wanted to get out got out after the DeepSeek crash. I don't think that this is real sellers. I think that this is just people doing puts, and I think that this is people that are just trading at this point. This isn't people investing.
So algos.
Yes.
Are you drinking milk?
Yogurt. Blueberry pomegranate. Why?
No, it's just it's a horrible day in the market and you're drinking some blueberry yogurt. That's all. I find it intriguing.
Yeah, it's from the farm. Drinkable yogurt, blueberry pomegranate. It's delicious.
What the hell's going on with Google? Why is Google down?
Once again, people are acting like this is going to go out of style somehow. Got news for everybody. Ask anybody that's running a small business or a large business. I'm sure everybody in your chat knows somebody that either owns a business or is in operations in a business. Ask them where they advertise. There's only 2 places to advertise, Meta and Alphabet. That's it.
By the way, did you get your yogurt from Costco or no?
No, it's from the farm.
Oh, okay. Just someone asked in the chat. Yo, I blame Tanner for this Costco tirade because once Tanner made you join SoFi Weekly and you turned it into Costco Weekly, you developed an obsession with why people are spending this much on Costco. And
yeah, it's stupid.
Yeah, now it's
they don't even have a dividend that's a percent. You know, if you're going to pay me 3 or 4% to hang out in Costco, I'll hang out in Costco. But you're not even paying me a percent on the dividend?
Okay, so here's another question. When does the NVIDIA bubble pop, in your opinion?
It's not a bubble.
No, as in when does NVIDIA have that quarter where they're like, hey, we're not growing anymore?
I don't think it's coming for a year and a half or 2 years.
Okay, so you think it's 2. So here's my question. If you think it's only 24 months away, which is not that far, do you think the market...
Far. 8 quarters.
It's far, but do you think the market's already trying to price in that lack of...
I don't know how you can price them when their EPS is still growing. And once again, they don't even need to grow top line to grow EPS. They can just pull an Apple and buy back 50 to 100 billion worth of shares every year. They certainly make enough money to do that.
Yeah.
Yeah, Tanner shook. He texted me yesterday. Do you want to talk NVIDIA? I'm like, sure. 9:30. He's like, never mind. Like, okay. He shook at being awake. I don't know. He shook.
Oh my gosh. Tanner, you gotta join a phone call with me and Steve. You'll get the Steve after hours and really see how he feels about the market.
I just think that this market is getting a little ridiculous with things because people want to come up with reasons why they should buy AMD. And look, I will admit I'm biased. Okay. I got into a very bad thing with AMD. I was down a significant amount of money for years. And then the second it came back, I sold, and it just never went back down. But be that as it may, whenever people look for reasons to buy the second, third, or fourth best company, instead of just buying the best company in a sector that's still growing, probably not the best move.
Yeah, I think that's always been the bear case on AMD as well.
And AMD is a great company, but they're not competition for NVIDIA. And the inference training, I'm pretty sure that what I heard last night was when AI needs to think and doesn't have the answer up front, it takes 10 times the compute.
Yeah.
And that's where we're going. Like, we're going into an era where the inference training is going to be massive. This CapEx spend could keep going. And remember, we're going from around 188 or something like that billion in CapEx to 320 billion CapEx this year. Okay. Microsoft ends their annual year at the end of June. They have to come out in the summer conference call in August and release their next fiscal year guidance, which is when you're going to get the big CapEx spent. They're probably not taking their foot off the gas, and Microsoft's going to be the bellwether for this because they start their fiscal year in the middle of the year instead of the end of the year. So you're going to have Alphabet halfway through the cycle, Meta and Amazon halfway through the cycle. If Jassy still has another 50 billion to spend in CapEx in Q3 and Q4, Microsoft is not taking their foot off the gas and stopping halfway through the year and announcing, "Oh, we're going to scale back to 50 billion."
And Jassy said yesterday he wants to spend more.
Of course, the demand is going to be insane. With this cycle, may be longer. I'm being very conservative when I say 1.5 to 2 years.
Yeah.
Very conservative. If you look at a company like Micron, okay, MU, and you look at their revenue, that is becoming very cyclical. And I think you're going to have a boom this year in certain things, including Micron, because of sunsetting Windows 10. But that's also a company that still generates a lot of money, even in maintenance cycles on revenue. You know, even when this becomes maintenance and not full-scale growth, NVIDIA is still going to be making a lot of money. And let's not forget the power of buybacks.
Well, also, hold on. We got this piece of news just now. Meta plans to debut a standalone Meta AI app in Q2. So you got Meta that's going to get ready to compete with Gemini and GPT. They're going to need more GPUs as well.
NVIDIA bought back 40 billion worth of shares this year. They bought back 12.5 billion the year before. They're probably going to buy back 60 or 70 billion this year. So not only are they growing their top and bottom line organically, they're going to buy back shares and blow past estimates. And I think people were so used to having jaw-dropping quarters of growth that a beat of 4 or 5 cents and 2 billion wasn't anything that they got excited about because it wasn't a jaw-dropping blowout quarter. But that's the problem. They're looking at the headline. They're not looking at the actual numbers. When you look at the sheer size, generating $70 billion more in revenue in 1 year, that's more revenue than probably half the companies generating a year from the S&P 500, if not more.
Yeah, of course.
And they grew their revenue by that much in a year.
Okay, so your thesis then on this is sentiment is just bad. And that is why we are seeing a sell-off here. Because I don't see any fundamental reason you're pointing to at all.
Sometimes good news is good news.
Yeah.
Sometimes you don't have to look for a needle in a haystack and try to be smart.
You mean a hay in a needle stack?
A needle in a haystack.
No, it's hay in a needle stack. You're saying it wrong.
No, Amit. It's a needle in a haystack.
Steve, we're in front of 3,000 people. Like, say it correctly. It's hay in a needle stack.
You don't have a stack of needles and look for hay in it.
Yeah, no. It's really hard to find one piece of hay in a stack of needles. That's the point of the metaphor.
But you don't have a stack of needles. You have a stack of hay. It's a needle. anyway.
The chat says I'm right. I don't know what to tell you.
No.
But anyway.
Once again, no.
Okay, so SMCI, are you out of it? Did you take your profits? What do you?
No.
Well, your options expired.
What did I tell you? I don't care if I don't make money on it. I'm going to see what it does tomorrow. I don't believe this freaking sell-off today.
But wait, your options expire on Friday, right?
Yeah, tomorrow.
And you're still in the money, so
yeah.
So you're just waiting for it to pump tomorrow if it pumps.
Why sell it now? Who cares?
It's kind of one of those like, all right, fuck it. If I'm down money, I'm down money at this point. I'm going down with the ship.
It is what it is. We'll sell them tomorrow. I don't think that this is going to be something that's sustained tomorrow. I think that everybody's wrong.
I don't think it's sustained in a few weeks from now. I think tomorrow could get ugly, though.
Maybe it gets ugly tomorrow. I really don't care.
I think the inflation reading as well tomorrow, if that's just not as good as the Fed wants it to be, that compounded with the tariff talk, plus the sentiment we have, like things could get nasty for the next couple of days.
Why can't we just look at what these companies are producing, what they're guiding for, and make a decision off of the captains of industry that are telling you what they're going to do?
I agree.
Why do we have to get so crazy over president said this reading came out as this, maybe it's going to do that? Sometimes it doesn't have to be that complicated.
So your take on all the Trump tariff talk is you don't care?
I don't care one bit.
But you don't think it has any impact on?
Of course it's going to have an impact on people's psychology and what people in the short term. But in the long term, if you're not bullish on these companies in the long term, who cares? Get out. Don't invest. I mean, that's the difference between short-term investors and long-term investors. I can sit here and ride something down and not sell, just like I did with Meta. Everybody's freaking out. Sell Meta, sell Meta. No, it's one of the greatest companies. Why would I sell Meta? I bought more under 100. Look where it's at now.
Yeah, I mean, that's another thing. I'm hearing a lot of people that want to get vocal when the market starts crashing because they've had this thesis for 5 years and now it's happening, but they're still invested in the markets. It's like, if you're confident a recession's coming, you should be selling everything.
Yeah,
but
look, people can be right for a month or two, but are they going to be right for the long term? Probably not.
Yeah.
And don't forget, just because it goes from December 31st to January 1st, and the market starts recording a new year with plus and minus, does not mean the business cycle stops. You're still in a bullish business cycle. And that's a big thing to remember. I think a lot of people are going to macro trends. Can you go to macro trends and bring up that chart with the S&P on the bar graph year over year? I think people are looking at macro trends, being like, okay, we've had 2 consecutive years of 20% plus. How many times has it done that before? What's the probability of this? Got news for everybody. This is a different macroeconomic environment than any of those other times. You go back to the 80s and the 90s and even the early 2000s, not this one. Go back. No, go macrotrends.com.
Oh, .com.
Scroll down, go to let me see what the first 3 are. Go to market indices.
Oh, this is where it is. Gotcha.
Scroll down and bring up the bar graph right there on the right, bottom right. That one. So people are looking at this and they're like, okay, 23 and 24%. When's the last time you had 2 consecutive years? How many times did you get 2 bad years after that or 1 bad year after that? They're looking at this and they're like, well, the probability is X. And they're trying to make rationales about other things. It doesn't have to be that difficult. The business cycle has not changed. Nothing has changed about the business cycle. And the Fed is still expected to cut 2 times this year. You still have a strong economy. The biggest companies in the world are telling you they're not taking the foot off the gas with spending. You listen to Larry Ellison. If you bring up Q2 transcript for Larry Ellison, he says, I don't want to misquote him, so I'll bring it up. Give me 1 sec. Because I actually want to read it. Because I don't think people pay attention to Oracle the way that they should.
I think your argument is very fair. I also think in this type of a market where everything has gone up for 2 years, the slightest bit of red scares people. And it's just an elementary way to analyze what's happening. Because you need some red after that much green. Like it's just things are
So,
inevitably not going to keep going.
Listen to this. Larry Ellison, Q2 2024. In response to this sharply increasing demand, Oracle is in the process of expanding 66 of our existing cloud data centers and building 100 new cloud data centers. We have to build 100 additional cloud data centers because there are billions of dollars more in contracted demand than we currently can supply. Blah, 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 blah. Even Oracle, which is not baked into anybody's stuff, has to build 100 new data centers.
Yeah.
Like this spend is going to continue to go.
Do you think
NVIDIA is the only chip?
Do you think it's retail selling, institutional, or just algos?
I think it's algo. I think when you get something like this, it's algos. I think some people, I mean, you saw the option market. How many people were buying options at 150, 160, 170?
Yeah.
And then how many people had puts? A lot of this is just gambling at this point. You never had option markets like this a couple of years ago.
Also, the percentage of cash in institutional money managers, Bank of America,
makes zero sense.
Well, it's the lowest it's been in a while. So it's at 3.5%. But money market funds just added 60 billion.
Yeah, and money market funds is close to 7 trillion or just over 7 trillion. It's insane.
Would you feel comfortable having your money in a money market fund versus Nvidia right now?
I mean, I do have money in CDs and money markets, but that's cash that I keep as cash. I don't put all my money in the market. But if you were looking at investment, what I would say is if you took capital that you were planning to invest and were uncomfortable investing at the market here, what I would say is, look, nobody can time the market. But anybody who wanted to do T-bill and chill got destroyed by the market.
Yeah. Yeah.
Cool. You T-bill and chill started at like 3.5%, 4%. Cool. You got into 4%. Maybe you rolled it at the right time, got 5.25%. You still generate less than 10% in 2 years. And the market was up 47, 48%. You got destroyed.
Archer, by the way, guys, down 11% after hours right now. Yeah, no, I agree. I also think names like Archer, which don't have earnings, they're getting hit the hardest because they're speculative right now. And that's okay.
And that's the problem. People are buying these stupid companies instead of buying quality companies.
Why? Why do you think people?
And I don't know anything about Archer, but you just said they have no earnings. So, I mean, I'm just making a generalization. Like people want to go into speculative stuff to try to get a 10 or 20x. And that's not investing. That's trading.
I agree. Archer to me is not a stupid company, but they don't have earnings. And if you don't have earnings, like who are they getting to buy the stock? Because it's not institutional guys that are buying this.
I don't know. But that's the problem I had with a lot of companies. I had that problem with HIMS, I had that problem with Rocketlab, I had that problem with Palantir. It's just the fundamentals don't support the crazy spike we had. And then you have quality companies that got taken to the woodshed. Look at Alphabet. There is no reason for Alphabet to be down. None.
Okay, well let me give you some bear cases. Put in the chat if you have any bear cases.
Oh, this will be good.
Okay, so here's my first bear case. By the way, before I give the bear case, Waymo 200,000 paid rides a week now. So that's a lot more than Tesla when it comes to self-driving paid rides. But here's the first bear case I got today from someone. Grok 3 is so good that people are not going to search on Google anymore.
Can I ask you something?
You could ask whatever you want. Yeah.
How are they getting to Grok 3?
They might be typing in Twitter on Google, but that's like, that's not really Google search.
They're still using Google, right?
Sure.
There you go. I just destroyed that bear case.
You didn't destroy it. The point is, if people are using LLM,
I did. You want to know why I did? Because to go to Grok 3, you need a web browser. The most used web browser is Google. And what happens when you go on Google? You see ads. You get engagement. They're able to sell ads. Boom. Next.
That's if you search on Google, like searching for Grok on Twitter.
Who's using Grok on Twitter? People are going to grok.com.
No, I don't even think is there a grok.com?
Yeah, there's a grok.com.
Yeah, there is a Grok. I've always used it on Twitter.
Oh, no, use grok.com. It's so much better.
Oh, I didn't know you use Grok.
I use all of them. I play with all of them. Have to.
Okay. But is there any argument that LLMs are commoditizing the search landscape at all to you, or no?
You still have to get to them somehow.
Yeah, but even if you get to them through the browser, that doesn't mean they're monetizing you, right? So that argument's not the most convincing.
Once again, people are acting like Alphabet is not going to be a player in this space.
That would be my response, which is that Google has generative AI search overviews, et cetera, that are.
They have the biggest training model. Think about it. YouTube is the biggest training model at this point for everything, and Google search. So they have the most data. I wouldn't count them out. I think it's silly to count them out.
Okay, so then why do you think the street is upset at them?
I don't know. Because they're a $2.5 trillion company and people aren't seeing the trees through the forest. I mean, I feel like we're back in years ago when people were like, yeah, they'll never be a $1 trillion company. Like, Alphabet is one of the most profitable companies. And I would say the most profitable because Berkshire, the way that they generate their net income this year, I don't think they're going to replicate that next year. Alphabet can easily replicate their net income, but Berkshire generated $106 billion. It's pretty crazy how they did it. But Alphabet generated $101 billion in net income. Like, are we really going to say that a company that's generating $1.9 billion in net income a week, that we're going to say they don't know what they're doing or they're going to lose to somebody else? They're doing a pretty good job at winning right now.
It's stupid. It is so stupid. I agree with you.
And that's once again where I'm like, I don't like where investing has got, because there are different investments for everybody, and you don't have to invest in big tech. People invest for many different reasons. Some invest for capital appreciation. Some invest for dividend income. Some invest for other reasons. But if you're investing for capital appreciation and you look at these as businesses, the idea of business is to solve a problem, generate revenue, and then turn a profit from solving that problem. Because if you don't solve a problem, that means that you don't have a product or a service that's in demand. And if you don't have that, you're not going to have a clientele. So those are the fundamentals of business. And now we extrapolate that and we look at the businesses that have the largest demand, that are generating the largest amount of revenue, the largest profits, and still growing, and people don't want to buy those businesses for some reason. It doesn't make any sense.
When are you buying the Tesla dip?
Where's
I bought some today, by the way.
And I don't think it's a bad idea. Look, I'm just going to make up a number, okay? 10 grand. You have 10 grand to put into Tesla, and you're saying, I am looking at this for a 10-year time horizon because I think Optimus is going to be huge, and I think full self-driving is going to do something. I sure as hell wouldn't put that 10 grand in today. I would be buying every month or every 2 months, a little here, a little there. I think the Tesla is probably going to continue to go down. I don't know when it's going to stop, but I think it's going to be volatile, and I would definitely scale my way into it. That's how I would be going at Tesla. I don't think there's any problem with buying here as long as you're willing to buy more if it keeps going down.
Do you think Elon is too distracted?
I don't think anybody can ever say that he's too distracted, because this has been Elon's MO his entire public life. He's always worked on multiple things. I think too many people are concerned that he's spending too much time on Doge and being in DC rather than focusing on his companies where he has investors. And I think that that's a challenge. Whether you agree with what he's doing with Doge is irrelevant. The bottom line is he has private and public companies with real shareholders, and the CEO is not there 100% of the time. I think that is the current optics problem that he has.
This time last year, I remember NVIDIA was at $60. Market volatility was bad. NVIDIA crushed earnings, and then everything started changing. The difference is exact same market volatility. NVIDIA crushed earnings, but NVIDIA didn't lead the market higher. NVIDIA went from 60 to 80 back in 2024 off their earnings. Do you think that's the market saying we're not ready for 2025 to be a compounding year in tech like it was in 2024?
I don't know what the market's scared of at the moment. NVIDIA consolidated throughout the last 3 months. It hasn't gone anywhere. It had a great quarter last quarter, face ripper, consolidated, and now it's selling off after this one. It's stupid. It's one of the greatest companies in the world that has no competition and huge demand.
Yeah, that's a fair point.
It's really annoying that this is what investing has come to. Really annoying.
So I imagine you think there's a lot of froth in the market still in these meme coins and stuff that needs to be.
I wouldn't say froth. I just think that there are things that are overvalued and there are things that are undervalued. And the fact that people keep trying to chase things that are overvalued without making a real investment case. You want to chase Palantir and you want to come up with a model that you think that it can get to 10 billion of free cash flow and you're willing to pay a certain price for that over a certain amount of time. I'm not going to debate that with you because at least you looked at the numbers and you have a thesis of what you think is going to happen. I won't debate that with you. Fine, do it. But if you're not really going through the numbers and understanding how business works and how investing works, I don't know why people would invest in some of these companies they're investing in.
Is Palantir going much lower than this?
Yes.
Why?
It should not be anywhere near 84. Come on.
So where is it going?
You don't want me to answer that.
I need the button where it says I can handle the truth. No, I can handle the truth. What, by the way, what movie is that from?
You did not just say that. You don't even know who said that.
I have a couple guesses. Is it Gladiator?
No. Oh my God.
Wait, hold on, no. It's some Greek shit. It's the guy in the Roman
No,
Colosseum,
it's
right?
not.
Oh no, he says, "Are you not entertained?" Sorry.
Oh my God.
That's a different one, bro. Oh no, sorry, that's a different one.
Have you never seen A Few Good Men?
No, I don't know what that is. A Few Good Men.
This is why we can't take your TV recommendations of The West Wing seriously.
Oh, this guy, Jack Nicholson, right? Yeah. I haven't seen it, but I've heard of it. You can't handle the truth. Okay, gotcha. All right, so now I know. Now I'll never forget this.
All-time classic movie.
Okay, so where is Palantir going?
Mean.
Yeah, be realistic. Don't be like be realistic here. Like,
yeah, realistic. If they don't absolutely decimate Q1, this is going under 50.
What is decimate? I think they will decimate Q1 though. I think they're gonna have a good Q1. I don't think that's the question. Like they need to grow 35%, right? Probably. Like, yeah, I think they're gonna do that.
To me, that doesn't even support it. But sure, that'd be a good start.
I get. So what you think they need? What they need to do 50% in Q1?
Not a single insider buy, and I get it. Private company for 20 years, they have a liquid market that they can sell in. I'm not bashing them for that. They deserve to make a profit. At the same time, insider buying is a lot more bullish than insider selling. 2, it is trading at such a crazy valuation. And once again, you're talking about a company that on a per share basis, okay, in 2027 is only supposed to do 95 cents a share. It's trading at 90 times earnings after the current fall from 125. Okay.
Oh, yeah.
So you're telling me that you're going to spend $85 for a company that's going to generate less than $1 of earnings in 2027 when you could be buying Alphabet that for every share you buy, you're getting $11.82 of earnings at a forward multiple of 14.5 in 2027. It doesn't make any sense. And once again, it doesn't matter about the sectors they're in. $1 equals $1 of revenue, net income, gross profit, and 10% growth is 10% growth, no matter what the numbers are.
Hold on,
I
I'm gonna let
don't
you finish. I'm gonna let you finish, but Archer's down 25%.
Why do people care about this company?
Dude,
What is this company?
they sell
You
evatols.
can't
You know
even
what
tell
that
me
is?
what they sell.
No, they sell evatols, the thing that goes up in the air and can take you from one location to another.
Oh, get out of here.
Dude, so many people in the chat like care about Archer, and it's like,
Why? Stop. I'm trying to help everybody. Stop. Can we bring what's the ticker?
dude, they don't have any earnings.
ACHR?
You're not gonna see any numbers. There's nothing.
What is this silly thing?
ACH.
4 billion market cap?
They have $1 billion in cash. They have $1 billion in cash. And they have a $6 billion backlog, just to put the
So they have no revenue. They lose money.
Correct. People were this thing was $3 5 months ago. A lot of people bought it. It went to $10.
So they got $500 million in cash. So really think about this. Great business to be invested in. $500 billion in cash, and they lost $493 billion last year in operating income. That was their negative operating income. Now they have some subsidies or whatever, interest coming in. So they ended up only losing $448 billion. You have another year like that this year without diluting shareholders, they have $50 million in cash left.
That is true. I mean,
so why would people care about this?
Well, again, people bought it in November 2024 at $3, ran up to 10, and then people fell in love with it.
Sell it and get out of it. Buy a real company.
Well, a lot of people are attached to it, dude. I mean, I've talked to a lot of people. They just love the story.
Don't get attached to stocks.
Look, I agree. The reason I've never bought into it is because there's no earnings. And it's same thing with a lot of these names, like Oklo.
This is another thing where you're going to need so much regulation to come through to make money for people to use it. Why would you? And this is another thing I get annoyed at. It was one thing for all of us to be invested in Palantir that did the homework at 7 and then in the teens and keep buying more. That's one thing because they were free cash flow positive. You had customer testimonies about what they did. We understood the technology and the ramifications of it. And you had the largest companies in the world showing off partnerships from Hyundai Heavy to Jacobs to Airbus to BP to the health systems. You had AIPCon. You don't have conferences where all these companies come to and showcase what they're doing. That's unheard of. Now, do I think Palantir is massively overvalued? Yes, but I certainly don't think it's worth 15. I think it is comfortably worth 30 to 40 a share.
Okay, but see, this is the question. You think it's worth 30 to 40. Do you actually think the market will take it down to 30 to 40?
I think it's going to be pretty hard because I think a lot of buying will come in around 50 if it gets there. I think a lot of buying will come in, but we haven't seen real resistance. The appreciation's been too sharp to really have to know anything because it was basically a straight line. You had some consolidation for about a 2 to 3 month period, 2-month period around the 80 level. It dipped and came back. So I would say right now the bottom is around 65. Like that's probably the number on the floor because you had around 67 at the end of November, came up, fell to 65, and then went back up again. So that's probably the floor. But break 65, all hell's breaking loose. And remember, I kept saying it and nobody wanted to listen. It's not going to go up indefinitely.
Well, yeah. Well, look, I think people that have been owning the stock for a long time at 125 knew that it was getting extended and eventually something was going to happen. It happened just so quickly. The velocity of it was like within 24 hours, you know?
Yeah, but you got to remember, the amount of high frequency trading that's happening is insane.
Yeah, I agree.
It's insane. And that's another thing with the market. It's not just player versus player. Like this is high level, high frequency, and then a lot of stop losses and everything else.
So let's say Palantir does have that decline. I don't know if that's going to be a Palantir independent thing, given how much of an AI trade it's become. I feel like the whole market would take a nasty haircut if Palantir gets to $40.
Maybe.
No, I don't even think it's a maybe, dude. I think for Palantir at this point to go down 50%, either earnings would have to be just god awful, which I don't imagine that's happening, or the entire market falls 10%, at least 5%, right?
Maybe.
That's where I would disagree with you. I don't know if it independently can fall to 40 while the rest of the market holds up.
I'll tell you another company everybody should be watching right now. If it keeps going down, this thing gets to 250, this is a screaming buy. Salesforce. Screaming buy.
Why?
Why? Look at the numbers.
I mean, all I heard was Benioff complaining about Microsoft this morning, but
okay, that still doesn't matter. They are pumping revenue, growth top line, growth bottom line, just put up over $6 billion of net income, largest net income year they've ever had.
I don't hate Salesforce. I agree with you. The numbers are
good. Think about this. Can you bring up, you have Seeking Alpha?
Yeah.
Can you go to Salesforce and go to the cash flow statement, please? I could build a chart also. I'll build a chart, make it nice and pretty.
Yeah, do that. That'd be easier, actually.
Yeah. I will build a chart for everybody.
They were down 4% yesterday. Obviously, Agent Force is just getting into scale. But I think, again, if all these SaaS companies move up in unison, that also is a bucket Palantir's in, which makes it harder to independently go down. Tanner says, next time I see Steve, I'm going to kiss him.
Yeah, I promise you should not try that.
Yo, Steve stays with the strap, bro. Steve stays with the freaking strap. Amazon over Salesforce. I'd probably buy Amazon over Salesforce too. I would, dude. Long term, I'd rather own Amazon than Sales. That's a no-brainer. But it depends how bad Amazon gets in this environment. Okay, let me play a video while Steve's making this chart. Here's
the chart's done. I just don't know why it's not giving me all three bars. So yeah, play whatever you need to play.
I'm still gonna play the video. This is Bryn Talkington, one of my favorite analysts, who is buying a stock that that I like, and she's explaining why she's buying more of this stock. And that stock is Robinhood. Here's what she had to say today.
Fundamental investor who's buying more Robinhood today. Yeah. Another one of the stocks that's right there front and center in the conversation.
Yeah, well, we talked about it, I guess, like a week and a half ago, and I said if Robinhood comes down into the 40s, I'm going to buy it. I mean, it bounced right. I bought it at 45 when the market sold off earlier. It bounced right off the 50-day. I mean, Robinhood is not trading at a parabolic level. It has an E. And I just think this secular growth trend that you're having, Robinhood just cleaning the clocks of a lot of other, we'll say, custodians, just because their user interface is incredible. They're doing great things on IRA, matching programs, a ton of education. And I think Vlad and them, as I've said before, we're watching them grow up. They have a ton of smart engineers. And so I think this was a really good opportunity to come in at, I think it was like 45.50, bounced off the 50-day. And look, it's already back at 51. And so I'm in this stock long term. And so I took the advantage to buy it. But I don't think you can even remotely compare a Robinhood to a Palantir. They're just two different businesses, and the charts look incredibly different.
I gotta get Bryn on the show, bro. She loves Palantir and Robinhood. We gotta talk to her one day. All right, Steve, you can share.
Yep.
This chart. Yeah, Kramer did have an interview with Vlad 2 days ago as well. We watched that a couple days ago.
All right. So when you look at Salesforce's cash from operations and free cash flow they're producing, it is a straight line up. Look at the cash from operations went up by almost $3 billion year over year. Every year they generate more cash from operations, and it's accelerating. It may not be accelerating on a percentage basis, but it is accelerating on an actual numerical basis. And you look at the free cash flow, so 6 billion to 9.5 billion to 12.5 billion. I mean, why? That's not slowing down. It's not stopping. And it's trading at 20 times 2027 earnings. So if I was to filter it, it'd be trading almost as cheap as Meta and Nvidia. Like Walmart is more expensive than freaking Salesforce. Walmart has 24.5% growth. Salesforce is 29% growth. Like, what are we doing here?
So you'd buy Salesforce over Costco?
All day, every day. Twice on Sunday.
Yeah. Look, I don't disagree. I don't disagree with you. Which then begs the question, why does Costco trade its valuation? Why do some of these stocks get their valuations? And I think that's been your whole point for the past hour. Which
yeah, because people look at them as recessionary and they always need a reason to be. Look, what you know that I'm a pretty straight shooter, right? Was I not one of the only people saying that there's no recession in sight?
Yeah.
For years?
Yeah.
Was I one of the only people that was saying that an inverted yield curve did not mean that we were going into a recession?
Yeah, that's everyone thought that the inverted yield curve.
Every single person except for me, more or less, was saying that.
You're so humble. I love it.
No, but I'm just saying, like, I'm a pretty straight shooter. And if I get something wrong, I say that I get something wrong. But I was correct on those things. And I have not been correct on Costco. It keeps going up. And I don't understand why, because I don't think that there's a recession coming. And that's my point. This has been looked at as a recessionary proof company, but there's been no recession in sight.
Well, what if people do start losing their jobs? I mean, today we had 20,000 people lose their jobs more than expected, right? Like, what if that becomes a trend?
Look, you know my fears about the next 10 or 15 years. But until those fears really start to come true and we have GDP growth, there's not going to be a recession. But they are going to need to figure something out with AI and robotics, because I do think over the next 10 years, there is going to be so many industries that are impacted that the wealth gap is going to get crazier and there's going to be less people able to work. I don't think it's a good path we're going down.
So your thesis is robots will take away actual jobs.
Yes.
And that's when we have a recession.
And it may not just be humanoid robots. Don't forget, just having an arm that does things is a robotic apparatus. It doesn't have to be a humanoid. Most of Amazon's warehouses are robotic at this point. But there's going to be less of a reason to have additional humans around in a warehouse or other things in 10 years from now. And then you look at full self-driving, why are we not talking about the entire taxi industry, whether it's Yellow Cab, Uber, or Lyft, is going to be impacted? Why are we not talking about the entire trucking industry is going to be impacted? And then you have a couple of robots in the back to move everything instead of humans.
Are you sympathetic to AI will create more jobs than replace?
I don't believe it's going to create more jobs.
Why?
How can it possibly create more jobs?
You need people to manage the robots, control the robots, create the robots.
How many people do you need to manage robots? You need one-to-one supervision?
Probably not. Probably not.
I mean, really think about it. I mean, you know more about robots than I do, and pretty much 99.9% of the people out there. But if these things can work 23 hours a day, and then you have other robots that are able to replace the battery packs, and you don't even need humans for that, and you just need some supervisors to make sure everything's working correctly, where are we going to get one-to-one supervision, or where are we going to get a society where robots aren't displacing them? I mean, think about it. You have a lot of service industries, from gardeners, landscaping companies, snow removal, pool service. What happens when a robot can do all that?
Yeah, I mean, you're not wrong. Those are jobs that definitely don't exist after that.
You know, look, You have entire hospitality industries that have housekeeping, that have services for the rooms. What happens when all of that becomes robotic?
Do you think the government just taxes Tesla then? And they give
I don't know what the solution is. And I continue to say to this day, like Andrew Yang or you don't like Andrew Yang, he was the only one in 2016 that was talking about this. And he was 100% correct. It was just, you didn't have Optimus or these other things. But he was talking about the advancements in technology and something has to be done to protect humans. And I really do think, look, what I see with these software platforms, there are so many advancements in them. And now you got Zuckerberg talking about, think about this. Remember, it was learn to code. Remember the whole movement, learn to code?
Yeah. It's stupid.
Okay, well, why would you even want to learn to code now? It's a waste.
You can ask Grok to code for you.
Not to mention, Zuck's going to have AI in 2025 that can replace mid-level coders. He said it on the earnings call. And then it's just going to get infinitely better, and eventually it's going to replace high-level coders. So tell me where all those high-end coding jobs are going to be. All those six-figure salaries for coding, multiple hundreds of thousands of dollars a year, in 5 to 10 years from now, you're going to try to convince me that those are still going to be there from Meta and Microsoft and those companies? You're going to have people that look at the final product or look at the timeline and do check-ins every day or every week. You're not going to need a team of 20. Maybe you need 2 people.
So do you think buying those tech stocks
Yes.
as an investor is the solution?
It's not the solution, but it is probably one of the best investments you can make right now. I don't know what the solution is, but this is a genie you can't put back in the bottle, because if we create regulation and stifle innovation, we will lose to our enemies. You're damned if you do, damned if you don't. You have to be on the forefront of this. We have to be in a winner in it. I am just not seeing a way, and I hope I'm wrong. I hope I'm wrong. I don't see a way where we are going to be able to create more jobs from AI and robots than the jobs that are lost.
Are you scared about China or Russia right now at all?
No, why?
Is it a factor in your mind when you're investing at all?
No, not at all. Zero.
Why not?
Once again, people get too fixated on things that are too hard to predict. Nobody knows what's going to happen. Put it in as a risk factor, and if that's going to derail your entire investment thesis, I don't know what to tell you. But am I worried about China or Russia when I'm investing in Alphabet or Amazon? No. Why would I be?
Apple, is this at an appropriate level? Is this undervalued? How are you thinking of this right now?
Yeah, I mean, I think everybody who's bet against Apple has never done well.
It's funny because it was up 2 days ago when everything was going red, and it's like it was the safety trade.
It's Apple.
It's Apple. That's correct.
Like, don't bet against Apple. I don't know what to tell you. Don't bet against it.
All right. I think that's it for us. This was a hell of a day, dude. I didn't expect 10% down on NVIDIA.
I don't think anybody did.
I don't think anybody did, but nonetheless, that's what ended up happening. I think the takeaway here is that if you're really this scared of 2 weeks of volatility in February, then it's just like it's got to be one of those things where you're either too conditioned to see green or you're not used to actual volatility, because this is real volatility that is like healthy. Maybe not on NVIDIA, that's a little weird, but on everything else that's flying like Archer, this volatility is like, yeah, there's no earnings.
Nobody wants to see their portfolio balance go down. But if you're shook about 2 weeks, I mean, I don't know what to tell you. Go buy the S&P.
Yeah. Yeah. Like, to dare to manage your own portfolio and have your own holdings, that is exciting, but that also comes with risk, and that also comes with responsibility. And that's okay. You're going to make mistakes. Everyone makes mistakes. But to cry about it, it's like, on the long term, if you're in the right companies, you just got to wait it out. And hopefully you don't need the liquidity right now. And if you're investing with money that you literally need tomorrow, that's also just not the best plan either.
Yeah. And I mean, look, there's a lot of good buys out there. And I think that too many people are just looking at big tech. You know, I don't think a lot of investors know what business development corporations are.
Yeah, no.
I don't think that people look at REITs and take them seriously, but there are some REITs that are really undervalued right now that pump out big income. You know, VC properties, for instance.
Yeah.
You know, go look at VC. Why gamble in the casino when you can own the casinos?
Well, that's another thing about this type of volatility. It forces you, like I'm a perfect example. When I invested in a biotech that I thought was going to solve all the world's diseases, and it didn't, and I lost like 20 grand. It forces you to look at higher quality companies. So if you're in some shitty stocks right now and you feel bad about it, you start looking at something that gives you a 5% dividend, which is not going to go up 30%, but it's a bit more safer. And you just like it forces you to broaden the intellectual horizon around stocks you look at, which is not a bad thing.
You know, you look at NNN, it's phenomenal. There's a lot of REITs out there that are really solid. Simon Property Group, I remember when people were trying to convince me that there were going to be no more malls. I mean, really?
Okay, I'm not going to lie, though. Malls are dead, bro. Like, I went to the mall the other day. Like,
They are
malls
not
are
dead.
so dead. No, dude, there's no one at the mall. Like,
What are you talking? I was just at the mall. It was packed.
When was this happening?
Over the week, Friday.
Was this like in the city?
No. Google Roosevelt Field Mall.
No, I'm gonna do it through Google.
I am not talking about little Class C and Class B malls. I'm talking about the creme de la creme, the big malls. They are not. They're the furthest thing from dead.
And my local malls, bro. I'm not saying they're dead, but they're not packed. Like yours.
Bring up Roosevelt Field Mall on the screen.
This one.
Yeah, try to get like an aerial view or something, and just to see how big this freaking thing is. So the reason malls are not dead is because, yes, e-commerce is getting bigger, but it's still only 20% of all retail. And malls are more than just shopping. It's experiences, movie theaters, dining, mini golf, a lot of different things. People want human connection. They want something to do. Class A malls are fine. And then you bring up a chart of Simon Property Group. It's gone from like 60 back to 170.
Yeah, I think the stock itself, of what controls malls, is not necessarily under danger. But the long term, I would not want to be long term invested in malls. Is my point.
And that's the difference between me and you.
Well, that's a REIT that I'm a bit more skeptical. Like New York property, like a commercial property, that I like. SLG.
Okay. So over the past 3 years, okay, Simon Property Group has done 5.3 billion, 5.65 billion, and 5.93 billion in revenue. Keeps growing. Their real estate, I think, is almost 99% rented. Their base, actually, I have all the data. Hold on. And then we can wrap. But let me
see, this is good. These are the types of companies
let me share my screen.
you can look at that are different than some.
So I wrote this on February 5th, so it's not even a month old. So this is all up-to-date data. And look, I've been bullish on Simon the whole time. So look at this. Their base minimum rent per square foot keeps going up. And their occupancy rate is 96.5%. It's the highest it's been since pre-COVID. So
that makes sense.
You
Look,
can't
that's a good
tell me
point.
that malls are dead when Simon Property Group, which is the biggest Class A mall REIT, has its occupancy rate and its base minimum rent going up.
That's a good
and
point.
all their contracts are tied to annualized fixed escalators. And the dividend, they had to cut it during the pandemic, but it is back to where it was, and they kept growing it. I mean, this is a phenomenally run company. I think the easy money's made on it, but people who bought it are doing very well on it. And it was the same thing with commercial real estate with SL Green and Vornado.
Steve Seeking Alpha, I'll put it right here in the chat. One question someone wanted me to ask you as well in the market open was, how many positions do you have?
I mean, real positions or fake positions?
Real.
Text me what you consider a real position.
Like,
don't say the number. Text me.
Okay. feel like you're still gonna have a lot of them.
Probably.
Okay, just text you. At least that much in the position.
Too many to say.
Dude, you are an ETF. You're like you're your own index fund at this point.
Yeah, I mean, listen, that article series that I write is a perfect example of me being my own ETF, because this will be the last thing that I'll share. So I actually think this is the funnest thing that I write every week. So for the past 208 weeks, I put $100 into an account and invested it. And my investment rules are: mitigate risk is my number one, generating reoccurring revenue income. 2, capital appreciation is a side project. Don't care about it. Okay. Last week, the S&P declined by 1.77% and the NASDAQ fell by 2.74%. And my account only went down by 0.79%. I think I have 90 something positions in this account. And when you look at the history of this, I am doing pretty well on invested income. And something that's really interesting is, let's see. I think this chart is really interesting. So my top 10 positions, when you look at this, they're up 33% ROI, but the dividend income generated has generated 16% of the positions already.
Wow.
And everything just keeps reinvesting. And then you look at the actual growth of the dividend income. I mean, this started out in week 1. I think it was doing like $7.40 or something like that after my first investments. And I think the first 3 investments I made were Altria Group, AT&T, and Starwood. And now it's doing $2,017.65. And the dividend snowball is really starting to come to fruition. And I'm planning on continuing to write this series for a long time. But the fact that I was able to mitigate risk through all the positions, I mean, you look at this, this is all the positions. Everything in the green is generating at least 1 share per year from their reinvesting their dividends. And when the S&P was down 1.77%, this account was down less than 1% because of the risk mitigation through diversification.
And anyone can follow this journey publicly.
Yeah. I document every trade. I've had to exit 4 positions because they cut their dividends, eliminated them. I sold out. I show every trade every week, go through all the data. There's a lot of data in this. Anybody can follow. It's actually the funnest thing I write every week.
Yeah. All right. Cool stuff, Steve. Thanks for joining and providing some commentary on a day like this. I imagine if NVIDIA gaps down to 115, you're probably going to be buying some more.
Hold on a sec. Did somebody said I'm in? Yeah, I sold WBA. It's not in here anymore. Unless I didn't take it out. No, it's not here.
Yeah, you sold Walgreens a long time ago.
I sold Walgreens the other week and took it out of the spreadsheet. I think I sold it 2 weeks ago. Somebody said in here, you sold, you're in WBA. How's that green? It's not. I'm not in it.
If NVIDIA goes to 110, are you selling Square and buying NVIDIA?
I kind of want to make my money back in Square and not take a loss before I sell it. I'm planning on doubling down on Square and buying back some of the money I lost. But what I will be doing, if NVIDIA gets to 110, I will be buying back my covered calls on SL Green and selling out of my entire position of SL Green.
Wow.
And I will be buying NVIDIA with it.
All right. That'd be a pretty SLG has been a good winner for you. So that would be a big rotation. All right. Cool stuff. Thank you, everybody. Steve's Twitter, I'm putting in the chat. If you want to follow him on Seeking Alpha, he puts out a couple articles every single week. I think it's the best content on that platform. You can check him out right there. And yeah, sucky day, but it is what it is. You have some of these days in the market, and hopefully we get a rebound on NVIDIA later this week.
Yeah, you can't look at this every 5 minutes.
No, 100%. And tomorrow could be nasty with PCE, and NVIDIA could get sold off even more. But I think over the coming months, we have to see what the narrative ends up turning out to be. All right. Thank you, everybody. Appreciate you. We will see you back tomorrow. Tomorrow's Friday on the Market Open. Bye, everyone. Have a good one.
Later, everyone.